Perfect. So, yo, what is up for y'all on the YouTube replay? I hope you're having a great day or a great Saturday. The market had a not so great Friday, but I want to show you two new stocks I just bought for the first time ever. If you didn't know, I bought two brand new companies. But first, let me give you a quick portfolio update. This is our main, if you look at the top, a dividend only portfolio. Every stock in here pays a dividend. And year to date, we're up 13%. We gave up a little bit of gains on Friday, but, still way better than the April dip, when there was the real tariff fears, when we were down 13%. But now we're up 13% year to date. Here's our total percent change in every stock. So luckily, we're green on every stock except Carlyle Group down there. We're still down 2.5% on them, but all our other holdings are still doing pretty good. Yeah, look at Friday right here. The Qs were down 3.4, Nvidia was down 5, Apple 4, Tesla 6, Robinhood was down 8. Yeah, let me show you my Webull portfolio really quickly. Obviously, it's Saturday, so we can't see Friday's returns. But on Friday, a lot of our stocks fell. Although it's hard to tell because we've just done so good on so many of these positions that even after Robinhood fell 10% and SoFi fell 8 and Reddit fell 5, we're still doing amazing. We do have some big losers in here though, like UiPath, Zoom. Sprouts Farmers Market is one that I really like. This is like a healthy grocery store. We're down 23% on them. TAP, Toast, it's that restaurant provider, point of sales that, also isn't doing too great right now. But yeah, let me finally show you the two new stocks that I just bought for the first time ever in my Never Sell account. Hey, what up, Malcolm? How's it going, man? CAI, what up, dude? So this is my buy and never sell portfolio, and the two new stocks I just bought for the first time ever. The first one is Ferrari. So check this out. Over the past 2 days is when I bought all my shares. I only have 3 shares. Again, it's not like some meaningful size position yet, but I plan to grow it to a meaningful size position. One reason why Ferrari, yeah, if you're looking at their stock right here, if you're wondering, whoa, why the big gap down on their earning, or why did the stock gap down so much? They didn't report earnings, but this is the reason. So Ferrari only projects a 5% annual growth CAGR through 2030. So that's not great, 5%, single digits. I think investors wanted a little more, but yeah, that was Ferrari. The reason, I didn't just buy Ferrari because they're on a dip. I bought them because this is a fundamentally good company. Like they're easily, from now on are going to be making 500 plus million in net income a quarter. A lot of Ferrari cars are like backlogged for a couple years. Like if you wanted to buy the most recent model, you have to wait a couple years, and you get a 0.9% dividend yield. They raise their dividend every year, so you're basically getting a 1% dividend if you buy them at this price. And the best part about Ferrari is actually the share buybacks. If you go to the net income is up by 12.8, but the net income per share is up by over 14 because the share part of the ratio went down. Pretty cool. So yeah, that was the first stock we bought as our newest position. And the other one we bought is MUSA. Probably no one in here has ever heard of this company before, but this is Murphy USA. It's like a convenience store, and they basically sell oil and gas. And if we just look at your typical oil and gas stock like Chevron, Exxon, they're both seeing a similar trend where revenue's down 9% just because of the price of oil. But this company makes good profits. This quarter they made $145 million in net income. Out of that $145 million in net income that they made, the dividend every quarter only cost $9.8 million. I kid you not, there's so much room for them to raise their dividend. So the dividend only costs $9 million. That's what's different from them about your average oil stock. Most oil stocks, Chevron, Exxon, have really high payout ratios, 40, 50, 60% plus. But this one has, an under 10% payout ratio. And look at, since they have such a low dividend yield, they're spending all the rest of their money on share buybacks. Here is the number one reason I bought this stock. It's my favorite way to get exposure to oil now. It's because, I kid you not, you ready for this? This company has bought back 36% of all the shares that exist since 2019 Q4. So basically since the start of 2020, they've bought back 36% of all the company, which is insane. And you also get a nice growing dividend. Look at that, a 0.5% yield, but look at the payout ratio and check out how the dividend grows every year. So that's my new oil and gas play. I only have 2 shares of them, but I do plan to make it a bigger size position. Blasty said, been to this gas station decades ago. Hey, nice, man. Supporting the stock. I appreciate that. Is this Bloomberg? No, hey, this is a brokerage. Yeah, if you want to get this software I'm on, it's in the link tree in my bio, the first link there. But Jaws said ARCC, this is actually a BDC. And what's so unique about BDCs is that actually by law, they have to pay out 90% of their taxable income in the form of a dividend. So whenever we go to the dividend right here, it looks abnormally high, but it's actually sustainable because of how the law is set up. So they have a 10% dividend yield that's actually sustainable. But again, whenever you receive this income, it's actually taxed as short-term capital gains. Looks like the growth is slowing a little bit. That might actually be why they're falling a little bit, just on top of just the market trending down right now. But the revenue did fall 1.3, and but they're still making insane net income. 360 million in net income. Let's go see how much the dividend cost. The dividend cost 317 million. So that aligns with that 90% payout ratio. So yeah, you're buying that to maximize your income, because if we zoom out, the stock is the same price that it was in 2019. 6 years ago, but you're buying that for the income. Pretty cool. They're kind of like an AG&C as well. My BDC that I chose to buy is actually, I bought it in my Roth IRA because remember, they pay short-term capital gains. So if you have it in a Roth IRA, the dividends are still tax-free. But I bought Main Street Capital. Again, it's kind of the whole industry right now. Dang, down 17% in a month. Yikes. We're down 7.4. And this one, what's unique about this one is this stock actually pays a monthly dividend. Pretty cool. Hey, what up, Hill? How's it going, man? What do you think about BJ's? Hey, so yeah, that's another cool stock. They're kind of like another grocery store or convenience store, and they've done pretty well. Check out their stock right here. Obviously, they've been trending down the past couple months here, just like all of them are. So retail operations, let's see. Yeah, that's good net income. Let's see the sales growth. So yeah, this mid-single digit sales growth, which makes sense for the industry, but net income's, easily 150 mil a quarter. Cash from operations, just as good. You get a dividend. You don't get a dividend, but let's see share buybacks. So net income's up 3.9, but net income per share is up 5.5. Wow. So yeah, they have done some share buybacks. They own they bought back 1.7% of all the shares. Pretty cool. Hey, what up? Sarah Mohammed. First time for me to find a really informative. Hey, I'm glad. By the way, if you wanted to follow button, we stream every day. I sell nothing. I have no course, book, WhatsApp. Watch out for people impersonating me. Hey, what up, P? Oh yeah, name application. Yeah, hey, P. If you want to get this app I'm on, it's in the link tree in my bio, but since you're on the YouTube stream, it's actually in the description. It's in the link tree in my bio, first link there for y'all on TikTok. Hey, what up, Looney? Good to see you, friend. So yeah, hey, what up, Kiva? Yo, no way. I know you from Ryan's Discord. But yeah, let's see here. TMC, yo, the thing with the metals company is, hey, what up, Jake? We'll try and get to PHOS. But this is... Oh, geez, sorry. Oh, man. Okay. A little sick, but that's all right. So this is the metals company. I would just be careful because this one is technically like a startup. You're paying for a lot of future hopium. If you go to their revenue right now, it says no data because they've never sold anything. They've never sold a product or a service because, they're trying to make these underwater robots that like suck the nickel out of the water and then sell it. They're burning through, 70 mil in net income. Basically, you're just waiting for this company. There's a chance that they may never make any revenue, but we just want them to finally actually do something. Hey, what up, Catherine? Let's see what this one is. PHOS. Hey, thanks, Wild. Look up PHOS. I can't find that stock unless you're talking about this Canadian microcap. Yeah, hey, we don't really cover these kind of stocks. If you look in the top right, they're only worth $86 million. They're basically penny stock. We don't really, and they're a startup with no revenue. So you got to be very, very careful with those. But yeah, I'd be so careful, no revenue. Hey, what up, Blue 4140? What up, dude? Good to see you. What are you buying? Yeah, hey, Daniel, the two stocks I just bought for the first time ever was ticker symbol RACE, Ferrari, and Murphy USA. It's my new favorite oil and gas play. They've bought back 36% of the shares since 2019, and I like their super low payout ratios. So, hey, Jamil, how's it going? He said, SoFi grab. You know what? We'll do SoFi because I do own this company. I might be biased. Here, I'll show you them. I actually own them. They've been one of my best performers and also one of my biggest regrets because I regret every share I've ever sold a SoFi. I regret every share I've ever sold a Robinhood because I only have a little bit left. But here's what's here's why they deserve to be at all-time highs. Not just propped up on momentum. Like, they deserve to be at this new 52-week high level because the fundamentals are so good. Check this out. If we go to their financial services, because this is a fintech, they have their own banking charter. No one expected this growth, not even the analyst expectations, and I'll show you that in a minute. But the revenue's up 105 after it grew 80, after it grew 222, after it grew 260. Like, it just the growth doesn't stop. And it's insane. And if we go to the orange line, which is the analyst expectations, every quarter they beat on every metric. They beat on revenue every quarter. They beat on EPS, which is net income, every quarter. And they're beating on EBITDA by a huge margin every quarter. So no wonder whenever this company reports earnings, they gap up so much because it was such a big beat from what the analysts thought. So I really just think people are starting to take SoFi serious. They're making net income every quarter. They made $100 million of net income this quarter. So yeah, I might be biased because I own them, but they've been a great hold. Hey, what up, Ant? How's it going, man? Smile now. How's it going? Rocky, rounding bottom. I forgot what stock we were talking about there. Do you think more red for Monday? I hope not. Let's hope for some good news over the weekend so we could gap up. I did actually buy in after hours. Hey, Tommy, what up, dude? What do you think of the market right now? I think this sell-off that we're doing is like more than halfway done. I think like we're like halfway through the dip. So I will be looking to buy next week. I do have some cash. If you look in the middle of my screen, I got $900 ready to buy the dip. So yeah. What about Intuit and their AI? Hey, what up, K-Mill? So yeah, this is the TurboTax company, one of the OG software names. Let's pull this up here. INTU. That is the ticker symbol, right? Yeah, there it is. So this is the company that, helps you out every tax season. They have like an exclusive partnership with Robinhood, which is cool. But the stock has been flat for a while. A lot of the software names have been flat for a while, or the ones that are getting hurt by AI, like think DocuSign, Adobe, Salesforce. The multiple is still pretty expensive. They trade at 50 times net income, but historically that's always what they trade at. Software does always trade expensive. You get a dividend with this company? I didn't know that. Actually, check that out. They raised their dividend every year. Let's see. Global Business Solutions. Yeah, check out the annual growth there. That's what you want to see. Consumer revenue, and then Credit Karma. I feel like I've heard of that before. Okay, but if we go to revenue right here, yeah, every Q3 is like their main quarter, but even the other quarters are really growthy. Net income, yeah, wow. If you average it out here, or maybe you could go to the annual number, but they're printing money, but the valuation might still be a little expensive. Let me see how much the dividend costs. So the dividend only costs $300 million a quarter. Since the dividend barely costs anything, they're spending 2x that on share buybacks. It's such a shareholder-friendly company. There's so much future room for them to raise their dividend. Like, this is a stock that I eventually want exposure to. They're on my watch list. You know what? I'll add them back to the top of my watch list. The valuation still might be a little expensive here, but they're probably always going to trade expensive, like a Palantir, because they're so growthy. And they have a good moat too. Okay, Miss said BABA. Okay, let's do it. So, Baba, hey, what up, burner? I hope not, but maybe. Blue 4. Yeah, we'll look at RGTI after this. That's a huge momentum name. Yeah, here's Alibaba. Wow, with the China tariff escalation on Friday there. Yeah, a lot of my only China stock fell like 10%. So yeah, Alibaba was down 8.9%. Let's go look at their numbers. What I like, this is basically like your Chinese e-commerce play. They own AliExpress. They're not like Amazon is business to consumer. Alibaba's more business to business, where businesses buy their stuff in bulk and then sell them themselves. And check out, this is their USD net income. We've converted the currency from Chinese yuan to USD. They're printing money. So if you average it out, like $4 to $5 billion a quarter, see free cash flow. Well, that should be choppy just because of it. But yeah, they trade at 18 times PE. That's normal for a Chinese company. I think you get a dividend now. Let me check. Yeah, 0.6% dividend yield. Very, very safe payout ratio. Active customers. Wait, where was that metric at? Wait, it's up here. Active customers. They have 903 million versus 811. Well, that's good. All right. They're in cloud computing too. I heard the reason Alibaba went up so much on earnings is because they announced they're going to get into chip making to fill up the void that Nvidia left. Because Nvidia can't send chips to China or something, and Alibaba wants to fill that void. But here's RGTI. This is your quantum momentum name because you're not buying this one really for the fundamentals. You buy this hopefully with a plan to get out, because obviously if you go to the revenue right now, like it's not good. I mean, the revenue's down 41%. It's only, this is almost a startup. They're doing $1 million to $2 million in revenue a quarter. The revenue's down 40%, losing 20 mil a quarter. So let's see what the expectations are. So, 2.6, what's the market cap? So, $15 billion company. So they're obviously super overvalued, super momentum. But yeah, you want to swing trade this. You're not really buying them as a S&P 500 alternative, but it's been performing insanely well. So congrats if you own that one. You gotta make a lot of money. Murphy Oil, yeah, we just looked at Murphy USA. This was a spinoff from Murphy Oil. In my opinion, Murphy. The other one's a way better buy. This is your pure oil play. They don't own any stores, but look at this. You buy this to maximize your income. You get a 4.67% dividend yield. This is the company. Let's see. If you look at any oil stock right now, your sales are down 15% year over year just because the actual price of oil is. So I decided to buy MUSA on the dip. This company, literally the share buybacks are nuts. Here, so you can tell, if we go to the net income is up by 0.5. What's impressive is the sales are down by 8, but net income is flat. So that means they grew their net margin. But if we go to EPS right here, look at this. The net income is up by 0.5. But the net income per share is up by 6.4 because they've bought back 5.5% of all the shares. Pretty cool. They're not like your average oil stock where they suffocate them with the high payout ratio. Their payout ratio is less than 10%. Pretty cool. Neo. Hey, I don't love Neo. Could you do Geo? Yeah. Hey, that's your prison stock. So, so let's see how they're doing. So the stock, you're not really hoping to the stock is the same price that it was back in 2007. So, hasn't been too growthy of a performer, but yeah, this company, let me go down here and see. They own a bunch of prisons. It's a kind of crazy, sector to bet on. Let's see how they're doing. Revenue is up 4. It's not great growth. I can understand why this stock has been, flat for a couple decades. Revenue loses to inflation, but at least they're making net income for the past 4 quarters. Yeah, they're making 20 to 30 mil a quarter. No dividend. They cut it in 2021. What are expectations? EPS is supposed to spike up next quarter. That might be interesting. That's your jail play. Okay. I think it'll go lower. Yeah. Hey, Ford. That's definitely an interesting sector. That's there's really no other publicly traded stock to bet that way. MP Materials. Yeah. So basically, if the China tariff stuff escalates, we need to be more mineral independent. China can say, hey, we're not going to give the U.S. any rare earths anymore. So the government's been taking stakes into various, precious metal companies like MP Materials, LAC. Look at this. U.S. to impose 100% tariff on China over rare earth export controls. So China, that's what I was kind of talking about. China's getting more strict with they're kind of giving us power by giving us the look at this. Bank of Nova Scotia acquires a 6.5% stake. MP Materials sets $110 kilogram floor price for rare earth steel. So anyway, this one, you're probably waiting around for 2026 for them to finally start having some revenue. So they're interesting. Basically the government can't allow them to go bankrupt. That's what's interesting about this. It's so important that they stay. Luke said AppLovin. Yo, dude, AppLovin, this is a beast of a company. I'm talking I want exposure to this stock at the right price. So the margins are unbelievable. So good that the SEC is investigating them for their ad targeting practices because their ads are so good and so profitable. So check this out right here. That's actually why the stock has been downtrending the past couple of days, because that SEC investigation. But this is the why I want them. This is crazy. If we go to the revenue's up 77%. So the revenue's up 77 and the net income's up 164. But notice the amount of net income versus revenue, aka the net margin. They literally, like before today, 40% margins are already insane. But a 65, like this isn't on some one-time adjustment either. They really had a 65% net margin. Unbelievable. Not just net income, but also FCF, which is free cash flow, up 70%. The growth is insane. At this growth rate, what's it going to be the same time next year? So I do love this company. The valuation's still a little high. They just got added into the S&P 500, but they deserve a high premium. What happens is, hey, what up, James? Yeah, hey, if you want to get the software I'm on, it's in the link tree in my bio, the first link there. It's where you buy stocks on. It's a brokerage. It's an affiliate link, full disclosure. If you go and deposit like $100, we'll both get some free stocks. APLD, yeah, hey, speaking of APLD, who owns APLD is actually Nvidia. If we go to the Nvidia portfolio right here, obviously they own a bunch of CoreWeave, but their second largest holding is actually APLD, and they just reported earnings, and they were some good earnings. I can understand why they gapped up. Let me go see what the AI news is. Signs $11 billion CoreWeave deal. Yeah, so if you notice this, here's the NVIDIA portfolio. Or NVIDIA is so big, they own some individual companies. NVIDIA owns a stake in CoreWeave and APLD, and NVIDIA basically orchestrated a deal between the two, a synergistic deal. So APLD went to a huge partnership with CoreWeave. But yeah, this is a data center hosting business, and what is this? High performance hosting business. Okay, cool. Well, anyway, check out though what they reported. Like this explains why they gapped up so much on earnings. Usually if you just look at the numbers, it kind of explains it. But yeah, look at this. The analysts expected 45 mil. They reported 64 mil. Insane beat. Okay. Honest said ASTS, yo, this is a space company, and let me show you why that the next 6 months you're in for a volatile, fun little roller coaster here. Here's what I mean. Because this is a startup right now, or pretty much if you go to the revenue, it's nothing, a million this quarter, under $1 million last quarter. But check out what the analysts are expecting next 2 quarters. Next quarter, they're expecting 22 million, and the quarter after 35 million. So literally the next 2 quarters, it's so crucial. There's like a spotlight on their earnings report, especially with this momentum, the stock, really pricing in the future growth coming. We don't want them to miss on these expectations. I would not buy them here, but you're watching those next 2 earnings reports with them. Should be interesting. Are you hopping into any XRP ETF? No, probably. I don't actually own any crypto. I heard XRP fell like 50% or something. Let me actually pull that up yesterday. There was it was called like a flash crash. So XRP was $2.80. At one point, it fell to $1.40. Look, like it was only for a moment there. Apparently, Robinhood disabled the buy button. Robinhood, you would place in market orders, like not limit orders, but you place in market orders. Robinhood wouldn't fill. Okay. Thanks. Yeah. Hey, no problem. 44. Are you looking at stocks with the crash on Friday? Yes, sir, Dylan. We are. 2 stocks I actually bought on Friday were Ferrari, ticker symbol RACE, for the first time, or I bought a share on Thursday and then more on Friday. I only have 3 shares, but I do plan to make this a bigger size position. They're a great quality company. Also, Murphy USA. It's an oil and gas play, convenience store play. I like them. So CAG, is that Congra Brands? They own Slim Jim. Okay, let's do it. I heard Mr. Beast just came out with like a competitor. Wow, this stock is not done too well. Whoa, this is the monthly. How far back? What? So this stock is low. If you bought this stock in 1997, you're down 30%. So yikes, the stock is not done too well. What's the yield though? So so you're basically buying this to maximize your income. Check that out. You get a 7.5% dividend yield. Ooh, remind me to look at Home Depot. I do want to get to Home Depot. This 7 you're buying this for the income, but again, you get a 7.5% yield, but you also lose I don't know if it's worth it. Let's see if the dividend's safe. Let's go do some math here. So grocery and snacks, refrigerated and frozen, food service. But so this kind of explains it. Like, you focus on the sales, the revenue, the lifeblood of the company. It's, down 5. Last quarter is down 5, then 6. So they're just ah on a they've lost all growth. Growth is negative, and profits have, or margins have collapsed too. Well, they made 106. Well, let's see. They made 164 mil in net income this quarter. Let's go see how much the dividend cost. They made 164 mil in net income, and the dividend cost 167 million. So, all of their actually they couldn't afford the dividend by 3 million. I can see why that one hasn't done too well. But hey, that's Slim Jim. I do like that brand. But yeah, you're buying them for the income. Again, it's not just their fault. The whole industry is kind of struggling. Look at General Mills, or like Hershey's, a lot of stocks. Or what up, Jackie said Shark Ninja. So yeah, if y'all know those like Shark blenders, Shark like little kitchen gadgets, they're actually publicly traded. Pretty cool. I didn't know that. They've been struggling a little bit, but let's see. Yeah, cleaning appliances, food preparation, cooking and beverage. Let's see what their margins and growth is. So actually, that's surprisingly good growth. Revenue's up 15, after grew 31, after grew 22. So no red, people like their brand, and the net income's surprisingly good too. The net income has doubled from the previous year. What's their net margin? So they have near 10% net margins. They're making 140 mil a quarter. Are they doing share buybacks? So net income's up 105. No share buybacks, no dividends either. But hey, you know what? They just sell a commodity. I don't know if I'd expect them to outperform in the S&P, tech-heavy S&P, but 24 times PE? They're definitely interesting. Definitely interesting. Let me go to Home Depot. I wanted to get to this one. So what up? Let's do Home Depot here. What up, Fennell? Hey, FCF stands for free cash flow. Good question. So here's Home Depot right here. This is one of my favorite dividend growth companies out there. That's also like a way to bet on a lower interest rate environment. As rates go lower, people will spend more on their houses as they see them spending on it as like investments. But yeah, check out the yield and check out how they grow the dividend every year. So right now you get a 2.5% dividend, and the income grows faster than the rate of inflation, which is cool. Like in 2021, you got paid $6 in dividends. Now you get paid $9 a year in dividends. Pretty cool. The PE is fair. PE is just the net income multiple plus any share buybacks or dilution. So trading basically 25 times net income. Again, if we look at their numbers now, they're going to be, slow growing, negative net income year over year, barely negative, down 0.2, just because of the high rate environment. You look at the home builders or pool, any of the interest rate sensitive sectors, like it makes sense, but they're still printing money, 3 to 4.5 billion in net income a quarter. Then they share half of that with dividends with you. So cool. Hey, Kadu, what up, brother? Good to see you. Jack said, what's this app? Yeah, hey, by the way, if you want to get this software I'm on, it's in the link tree in my bio, the first link there. This is a brokerage where you buy stocks on. Someone said, how do you find stocks? Well, hey, sometimes like if I clicked on the wrong thing there. Here's actually a cool feature about this brokerage I'm on right here. One thing you can do is you can see all the investment themes. If you're looking for certain sectors or trying to find new stocks, sometimes I'll just go to this watch list right here. And if I like any certain like Red Sea shit. Like there's so many different sectors you can like find new stocks in. And also we can see the interest rate cut probabilities down here. Oh, and the institutional tracker. You can see what ARK and Berkshire Hathaway is doing. But hold on. Well, let me find this right here. This wasn't the main thing I wanted to point out. So yeah, here's what I was talking about, the interest rate sensitive sectors like Home Depot. I like these sectors right now. Warren Buffett is betting on it because there's a clear interest rate cut path. If we go to October 29th, their meeting, literally the market's pricing in a 98% chance of another 25 basis point cut. So yeah, in October 29th, which is this month, another 25 basis point cut. And then in December 10th, 92% chance of another 51 basis point cut. So anyway, rates are coming lower over the next couple months. And I want to bet on the interest rate sensitive sectors. What website is this? Yeah, hey, by the way, this is a brokerage. It's a software where you buy stocks on. If you want to get it, it's in the link tree in my bio, the first link there. It's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. But let's keep going here. Justin said Dell. Hey, let's do Dell right here. Hey, what up, Freemy? Yeah, hey, a lot of the BDCs got chopped. All of them did. ARK, yeah, Main Street Capital's down 17% a month. We'll look at them too. Ooh, we got to look at JBS stock. Yeah, I'll show you the REIT I really like right now. So here's Dell Technologies. This one's kind of competing now with Super Microcomputer, getting into like the GPU installations, installing the whole servers for you, the whole enchilada. So yeah, their infrastructure solutions group. Check out the growth here. Like this is what I love to see. It just rocketed up 44% year over year. So the growth is back on Dell, which is good. Let's see. Yeah, they beat on expectations, which is good. And look at that net income. This is great. Easily over $1 billion in net income a quarter. And you get a good yield, a 1.3% dividend yield. So not too shabby on Dell. This is like a value play too. Like even though the stock has done great, it's still only trading at 22 times net income. And that's real. They're really only trading at 21 PE. All right. Let's see. Yeah, hey, sorry. Yeah, if you want to get this application, it's in the link tree in my bio, the first link there. It's just a brokerage. If you want to get, you can just type it into Google. It's just a brokerage called Moomoo. Yes, sir. So let's see. Which one? So speaking of REITs, by the way, all the apps I'm using are in the link tree in my bio, all the brokerages. But yeah, here's my Roth IRA. One REIT I'm specifically looking to buy more of is Iron Mountain. I'm almost down on my position. We're only up 2.5%. This is your like AI REIT, that I think is actually going to have real stock price appreciation. You look at Realty Income, that one is lower than it was in 2019. So hey, thanks, Mills. I appreciate that. It is Saturday. Happy Saturday, y'all. But another higher yielding play, look at Main Street Capital just on the 1 month. They're down 17.5 and we're down 7.5. But what's cool about this one is you get a monthly paying dividend. This one has a 6% yield. Iron Mountain has a 3% dividend yield. Safe mid 60 payout ratio. And I own them on my Roth IRA too for the tax-free income. So, okay. What did I get here? Jeff Mack, what up, dude? Shout out to the member Jeff Mack and Looney said Pony AI. So let's check this one out. $7.2 billion market cap. Let's go do some analysis on them. Or let's see if there's any news around them. Nope, no news, sadly. Or is there news up here? No, not really. No partnerships or anything. They have real revenue though. Check that out. In the most recent quarter, the revenue was 21 million, and it says it's up 75%. Yeah, it went from 12 mil to 21 mil. They are still losing a bit of money, 50 mil, but it looks like they can afford it because they have a fortress balance sheet. Wow, actually, hold up. Let's see. 608 million of cash. So they have 608 mil of cash, so they can afford to burn, net income for a while if they need to continue to do that. But the growth is good, 75%. As long as they can keep up that growth, I mean, I like this one. Let's see shareholders. Anyone I know? Oh, look at that. Toyota Motor kind of backs them. Toyota Motor owns 12% of all the shares. China stock concept, robotaxi. Oh, hold on here. Do beware. This is, but all the revenue does come from China. Okay. Yeah. Hey, try not to spam there. Hold on here. Yeah, we'll try and get to UAMY. I don't know. A lot more REITs in trouble over office building. Yeah. Hey, I would, yes, definitely stay away from the office, REITs. Realty Income actually used to own a bunch of office properties and sold it off or spun it off into, I remember ONL. Realty Income spun off all their office properties at ONL, and it was genius. It was genius of Realty Income because their assets, they were able to sell it at a great valuation, and where it's $25 a share, now it's $2 a share. So yeah, the office REITs, this is your pure office company. Wow, the expectations are in the toilet. Wouldn't want to own this one. Yeah, look at that. The revenue's down 7 after it's down 22. So would definitely not want to be in the office ones. I like self-storage REITs. I like the data center REITs like Iron Mountain. Why don't you throw dividend stocks in your Roth IRA? I do own them in my Roth IRA, but only the non-qualified dividend-paying stocks, because all of my other dividend stocks, whenever I receive the dividends, they're tax-free in my taxable account. So I don't mind it. Looney Brian, I wouldn't touch the REITs right now. Hey, we are going to a lower interest rate environment. I am curious to see what will happen at the next two rate cuts, because people will shift. Like if you look at them, actually, let me go back real quick, and then we'll go to Iron Man. If you look at the middle of my screen, you see how it says we get a 3.85% APY. whenever the Fed's go and cut rates 25 basis points, your high yield savings rate, your basically your long-term bond rate goes down. And so this will go down as well. So your high yield savings account rates falls with whatever actual interest rates are doing. And as we know, by 2026, rates are going to be almost 1% lower or 0.75% lower. All right, let's get to IBM right here. This one's a cool dividend growth company. Check this out right here. So if we go to the dividends, you get the yield, you get a 2.5% dividend yield. So that's a great yield. That's actually sustainable. I love how diversified their industry or their three industries are. They're in software, consulting, and infrastructure. How's that doing? It's up 13% year over year. Software's up 10%. Hey, that's seen some really nice growth the past 2 years. But let's just go down here to net income. So yeah, remember when we go to dividends right here, since the payout ratio is 100%, that includes this one-time adjustment. Because if we go to the net income, it says they lost net income that one quarter. They didn't actually lose net income. How do you know? Because you go to the operating profit. They actually made $2.2 billion from the core business. So they had some one-time adjustment. Don't worry about it. They really made like basically $2 billion net income. So dividend payout ratio is much lower. PE ratio is even much lower. So I do like IBM, and I can totally understand why they've done so great. And everyone who's a shareholder must be really happy because not only have you gotten a nice stock price appreciation, but also the 2.5% yield. So nice. JBS does so much revenue. Let's see. JBS does so much revenue compared to MC. Well, this is, wow, huge market cap, $14 billion company, but the stock is the same price that it was in 2021. What industry are they in? Must be, beef. Oh, okay. This is that, beef and pork provider. So yeah, beef North America, pork USA, so they just sell a commodity, but they're printing money, This is in USD. We've converted it. They're a Brazilian company, South American. So we've converted it from Brazilian dollars to USD. And even in USD, they're making good money, 600, 700 mil a quarter. It has some good growth rates as well. So, yeah. Good space talk. I like RKLB. Rocket Lab. Out of all the space stocks, this one is one of the better ones because it's not just some startup. All right, let's see. UAMY. Let's do this one here. United States Antimony. So I think what is this right here? I don't remember, but they're at an all-time high. So congrats if you own this stock. You got to be up on your position. Let's see. Antimony. Zeolite. What? So what is this? This is a rare earth mineral company. Okay, so this is another rare earth mineral company. If you look at a lot of the rare earth mineral stocks like LAC, MP Materials, the government is taking stakes into these certain companies because we want to be more resource mineral independent. Let's see. Yeah, look at that revenue growth. This is really impressive. The revenue's up from 3 million to 11 million. And wow, is that real? They really did make net income the past 2 quarters, and even when they lose money, they barely lose any. So actually, this one's not too shabby. It's what's the market cap? It might be a little overvalued. 1.6 billion might be a little tough to pay, but I can see why they've been doing so good, especially with the momentum around the whole industry, the rare earth mineral industry around MP Materials, LAC. So hey, they're interesting. Hey, what up, Devin? What kind of work do you do? Hell yeah. Hey, we just look at stocks and stuff. By the way, I don't sell anything. I have no course book, WhatsApp, Telegram. Watch out for people impersonating me. I'll never follow you, DM you, nothing like that. Do BDCs do worse in a lower interest rate environment? Yes, because basically companies go to BDCs like Main Street Capital to get access to money. And what's cool about Main Street Capital more than a lot of these other ones is that Main Street Capital takes big stakes into the companies on top of lending them money. So they share the upside and because they have ownership in the companies. Yeah, there were some clones of you following. Yeah, hey, watch out for those people. Yeah, that's unfortunate. Yeah, no, I'll never follow you or message you. I don't sell anything. So yeah, it's unfortunate. So Brian said VNQ, this is the Vanguard REIT ETF. So if you're just looking for a just get exposure to the whole industry. You can buy this ETF and it just breaks your money up for you into all the individual REITs. Like I love Welltower. This is your senior housing care REIT. It's done phenomenal. Like look at that stock price appreciation and you get the nice dividends. So yeah, those are senior housing operations, triple net lease. I like that one. Prologis right here, PLD. That's your warehouse one. AMT's your cell tower. Equinox is data center. SPG Summit Property Group is mall. Realty Income's your triple net lease. So, oh, they got CBRE on here too. And public storage, they got self storage in there. So cool. Although, do beware, these REITs don't outperform in the long run. I'm a fan of picking and choosing your own REITs. I would just pick some instead of buying the ETF because the ETF, again, it's the same price that it was in 2019, but you're buying it for the income because you get 4% a year. So you get most of your income in dividends. So you get 4% in dividends, and then you hope for like 2% stock price appreciation. All right. What software is this? Hey, what up, BC Moon? Yeah, hey, if you want to get this software I'm on, it's in the link tree in my bio, the very first link there. This is it's where you buy stocks on. It's actually a brokerage. Yeah. It's my favorite one. Oh yeah, and you can see like the where was it? The super investor portfolio. Speaking back to someone said Nebius. You know what? Yeah, we'll go ahead and do Nebius. So okay, if we go to the super investors portfolio right here, like Nancy Pelosi, they have to make all their trades public by SEC law. Oh yeah, you can now like batch trade, follow them into their positions if you wanted to. But anyway, going back to Nvidia, because Nvidia is so big, they own some individual stocks. One of the companies they own is Nebius. This one just had a huge deal with Microsoft. Actually, let me go back down here. Weekly news. Yeah, Nebius and Microsoft form major $17.5 billion AI infrastructure partnership. So that's great news for Nebius and the future sentiment around them. Again, I wouldn't just buy a stock because NVIDIA owns it. You always want to go do your own research on it. When we do our own research, like this looks great. The revenue went from 14 mil to 100 mil. And it was 100 mil this quarter. In 2 quarters, analysts are expecting 265 million. So this is like a pure growth play. I wouldn't buy them here, but I can totally understand why they've done so great. Okay, JD stock. Yeah, what up, chicken? Let's do it. JD. I don't love these. The Chinese retailers, you just don't. You just don't really want these. This one hasn't done great. It's lower than it was in 2015. So you bought this a decade ago. You're down on your money. And it's like I'd buy a US retailer a million times more than a Chinese one. So Amazon would be a better play, maybe even Alibaba. But yeah, they trade at low PEs. They just sell a commodity, low margin. I think their margins just went to zero. Normally they're making a good 1 billion, but something happened this quarter where their money went negative. Their operating profit went negative, but the net income fell by 50. So I don't love that. Like they're Chinese, so they just can't trade at high valuations. So I just don't love the Chinese retailers. Do you get a dividend? Oh, hey, here's the good news. This is actually great news. Since they have a low PE ratio, the yield gets with such a low payout ratio, the yield is super high. Check that out. You get a 3.2% dividend. So nice. But yeah, these don't really outperform in the long run. A lot of ETFs like CQQQ, they buy all the Chinese stuff without the Chinese retailers because those are just dogs. So I would just be super careful with that. But you get the nice yield. Okay, Lucas said GSL. Hey, this is your Cayman Islands, or actually Marshall Islands company that pays no taxes. And since they pay no taxes, their margins are ridiculous. But anyway, these are one of your shipping companies like Zim. You buy them for the dividend. Actually, this stock is the same price that it was in 2009. But it's done really great recently whenever there's the supply chain issues, Red Sea issues. This one really benefits from that. And, here, I'll show you the tax rate up here. Their tax rate says 0. Because they're headquartered in the Marshall Islands where they just don't have to pay any taxes. So that's why their net margins are so high. They're making, this is great news, way more consistent, way better numbers than Zim. But they're making 90, 100 mil in net income a quarter. So just this quarter, they made 100 mil in net income and the dividend only cost $21 million. So yeah, they got room to raise the dividend if they wanted to. Again, where does the revenue come from? Let me check here. Breakdown worldwide. Okay, well, it's not going to. Okay, but anyway, they're kind of like an RG or RE, I think maybe I forget the ticker. They're headquartered in the Cayman or the Marshall Islands, so they pay no taxes. Okay. Um. Hey, what up, Ryan? What up? He said KLAC. Good to see you, friend. So this is KLA Corp. Let's do it. DDI. Oh, hey, remind me to look at DDI. I want to get to that one. Do you have KVU? I don't have any KVU. That's Tylenol stock. They have not done too well. What is this app? Hey, by the way, if you want to get this app, I'm on it. It's in the link tree in my bio. It's where you get stocks on. But anyway, here's KLA Corp. It's an affiliate link too, full disclosure. If you go and deposit $100, we'll both get free stock. But look at this. $130 billion market cap. Insanely big. Where's the revenue come from? Oh, so China is where most of the revenue comes from. So China, then Taiwan, then Korea, and then North America. So only 11% of their sales come from the US. But yeah, this is a semiconductor play. And the growth is good though. You know, I really care about the numbers. Let's go analyze the numbers. First off, they've been beating on expectations. Check that out. The orange line is what the analysts expect. Every quarter they beat on revenue. Big beat on net income this quarter. And on EBITDA. So they actually have been having some impressive beats on what the analysts expect. Yeah, check that out. The growth is insane. The net income's up 43% to 1.2 bill. What's their margins? Yeah, wow. Expanded margins from 32 to 38. That's really impressive when you do 3 billion of revenue a quarter. You know, that adds a lot to your bottom line. Nice. They're pretty cool. Gold is the best. Can you say something about gold? Well, hey, if you want to get gold, ticker symbol IAU is the best way to do it. You know, it's literally the commodity of gold just in an ETF. You know, if you go buy a bunch of gold, you know, most likely you don't want to keep it under your mattress, so you go and pay somewhere to store it. So this is you know, and when you go to buy it, you're paying a spot fee. And if you're buying gold in smaller quantities, you're really getting bent over. But when you go to sell it, you're paying a spot fee. So this is a pleasant alternative. A lot of people like to own their physical gold, and I am a fan of that. But this is the same thing. It's SIPC insured for 250K, so it really does follow what actually gold does. It's also run by BlackRock. Another way you can get exposure to it is ticker symbol GLD. And I just had the two different charts pulled up. GLD, if we compare that to ticker symbol IAU, they're the exact same. It does exactly what gold does. There's no difference. But IAU has a lower expense ratio. But yeah, gold's done great. What's the name of this app? Yeah, hey, by the way, if you want to get this app, by the way, this is a software where you get stocks on. Where you buy stock, just called a brokerage. It's in the link tree in my bio, the first link there if you want to get it. Or yeah, you can type it into Google. It's a brokerage called Moomoo. Yes, sir. So all right, let's look at DDI right here. Then we can look at hey, what up, David, Martin, and L. Let's do it. So DDI stock. So this is Double Down Interactive. They're a small company. They're only worth $440 million. Yeah, I wouldn't be going crazy to buy gold right now at all-time highs, but yeah. So here's Double Down though. Let's see. This is I can't talk about what industry they're in, but that's the industry. And if you look at the very middle of my screen really quickly, that industry is certain states are raising taxes on. I just don't love this industry as an investment. But if we look at the revenue, this isn't great. I can kind of see why the stock hasn't done too well. The total sales, the lifeblood, the revenue of the company is down 4% year over year. The net income is down 34%. They're still making good net income though. Look at that. 20 to 35 mil. What's their net margin? Oh, wow. Insane margins. They normally have like 35% margins, but it fell to 25. But still good stuff here. Oh, an insanely good balance sheet. Wow. Hold on here. 480 mil of cash and no debt. What was the market cap? Wait, are they trading at cash value and the whole market cap is 440 million? You know what? I'm going to add them to the watch list because I kid you not, they have more cash than the entire market cap. Whoa. Hey, thanks for telling me about that one, Aaron. I appreciate that. So that would be the one thing I find value in, the fact that they're at least still making net income every quarter and they have so much cash. Let's see if that's cash is earning interest. I'm already know that it is because I see they have short-term investments, which is 1 to 3 week treasuries, but let's see. Yeah, pretty cool. I'm buying everything since the crash. Hey, what up, Chase? Yo, the two new stocks I bought was Ferrari and Murphy USA. Those are the two new stocks I bought. Okay. Um, let's see. Cybersecurity. Yo, I do like Palo Alto Network. Let's go. Let me look at this one though. Maybe we'll get to some cybersecurity names in a second. Because I do love cybersecurity. That's like a part of software I think is like immune to the AI bubble or like AI thesis hurting them. Like Salesforce is getting hurt, Adobe's getting hurt, but I think cybersecurity is good. So here's Civitas Resources. Yikes. So it's lower than it was, 7 years ago. What's the market cap? 2.7 billion, really low PE. Let's see. Oh, crude oil. Okay, so it's an oil and gas play. So crude oil, again, it's probably revenue sales are probably down 10% year over year. Yeah. Sales are down 20%, profits are down 40, but they're still making good net income. Uh, you know, over 100 mil in net income a quarter. Do you get a dividend? So whoa, a 10% dividend. That's what's kind of cool about the dividend names. You kind of buy them so you get a crazy dividend. Uh, you know, again, you're kind of buying this to maximize your income. It's the same price that it was in 2017, but they can't afford the dividend. Let's see. So they did 124 mil of net income for fun. Let's see how much the dividend cost. Dividend cost 71. Wait, nope, wrong number. Dividend cost 47 mil a net income a quarter. So they actually cut it. Oh, hold on there. That's not cool. Sorry. Guy spamming. There we go. All right. So yeah, there's Civi. You kind of buy that. My favorite oil and gas play that I literally just bought that I've done so much research on is Murphy, MUSA. This is my new oil and gas play. I bought them literally on Friday. So yeah. You don't pay tax on dividends as long as you reinvest. That's not true. I don't know the context for what that you were saying, but yeah. Wait. How do you know if a stock is paying a tax-free dividend? Oh, that's what he was saying. So basically, what I meant by tax-free dividend is if they pay a qualified dividend, and you if they're not a REIT, BDC, MLP, 99% of the time they're paying a qualified dividend. Like oil and gas stocks, like 90% of stocks pay qualified dividends. And for me, since I make under 48K a year, it's actually completely tax free. So yeah, pretty cool. Because long-term capital gains are taxed at 0% if you make under 48K. King said, "Do you have any Adobe?" I actually do not have any Adobe, but I do use Adobe products like every day. CrowdStrike. CrowdStrike owns cybersecurity. Yeah, hey, CrowdStrike is huge. You know who also owns CrowdStrike is the genius trader, the one who can never lose, Nancy Pelosi. She's a super investor by SEC law. She has to make all her trades public. And so we can see what she owns. One of the stocks she owns is CrowdStrike. It literally over, I believe, 80% of the S&P 500 uses CrowdStrike software. So the growth is really good. If we go to the revenue right here, revenue's up 21 after it grew 31. So the growth is really good on the revenue, but if we go to the net income, they're still seeing negative net income numbers because of their lawsuit payouts. Because if y'all don't remember, it was right here on this day, they had this update that went out that whenever you got the update, it would break your computer. You couldn't even start up your computer. So it wasn't great. They're seeing a lot of lawsuits from like Delta Airlines and a lot of different people. So that's why the net income negative. But I still love their product. They're not going to do something irresponsible like that. You basically want to do an EBITDA multiple because they're seeing that the one-time adjustments for you almost want to do an EBITDA multiple. The EBITDA is supposed to continue to grow. Anyway, pure growth cybersecurity company. Another great cybersecurity name is also Palo Alto Network, PAN-W. So, Palo Alto Network. This one's actually a cybersecurity subscription play. They focus on like higher net worth clients, or basically businesses, but 54% of the revenue is their subscription business. I love subscription models because it's all reoccurring revenue. And check out how growthy this is. I mean, every year their revenue just hits a new record. And that's the subscription revenue, and not just revenue, but also net income. They're making a couple hundred mil of net income a quarter, nearly 500 mil to a bill of free cash flow a quarter. So Palo Alto Network's another beast of cybersecurity name. Can you share what this app is? Yeah. Hey, by the way, this is a brokerage where you get stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. If you're on YouTube, it's in the description of the stream. And full disclosure, it's an affiliate link. So if you go and deposit like $100, we'll both get like some free stocks. So yeah, I love this app. You know, it's the most. I have all these brokerages right here. I have Robinhood, and I also have Webull. I have all these brokerages, but this is my favorite app to buy stocks on. It's the lowest fee brokerage. You know, a lot of people keep their idle cash in here. Anyway, most recommended one. Okay, so anyway, let's see. What made you decide on Murphy? Hey, best way to support me. Right after this stream is over, I'm ending it in like an hour, so I'm still going to be streaming for an hour. But I'm going to make a video specifically going over why I bought the dip on Ferrari. I just bought a bunch of shares of Ferrari for the first time. Well, 3 shares, and Murphy USA for the first time ever on Friday. So I'm going to be literally when the stream is ended. But hey, best way to support me is just subscribe to my YouTube channel. It's called Nathan Roberts, also in the link tree in my bio. I'm streaming on YouTube as well, but I'm about to release a YouTube video when the stream's over. Why I bought those 2 stocks. And also, if you scroll back to the very beginning of the stream, I also go over in detail why I bought Ferrari and Murphy. So, okay, let's keep going for some more stocks here. Do you have M1 Finance? I do not have M1 Finance. Can you analyze Constellation Energy? Yeah, hey, so that's my favorite nuclear utility play out here. I do own them, so I might be biased. Check this out right here. We're up 78%. But yeah, Constellation Energy, if you're looking for exposure to nuclear and utilities, this is the best stock out there. They're the purest play for nuclear energy, which is what all the data centers want right now. They want nuclear energy. You know, they don't want to burn coal or natural gas. But basically, this company, Constellation Energy, owns literally 30% plus of all the USA nuclear reactors. There is no close second. This is the purest play for nuclear energy. And if you're going to buy stock at all-time highs, you know, I would buy probably when you look at all the other nuclear plays like Oklo, SMR, they've all done just as good. This is the one you really want to get exposure to. That's the quality one that you want to buy and never sell. And I'm totally biased because I own them, but I own them because they're the best. They're the best. Okay. Google stock. You know what? Let's do it. So Google, you know, another great never sell. What up, Encara? Is there an amount of time you have to keep it before selling? No, JD. Or I don't know what you mean there. No. So anyway, here's Google right here. This is, sometimes for an IPO, sometimes there's restrictions. If you buy a stock before the IPO, sometimes they make you hold it. Anyway, back to Google here though. Great company to buy and never sell. I do own them. And here's why I think they're going hot. Like if your intention like me is to never sell Google, it's worth nibbling it on and buying even right here because the multiple isn't crazy. You know, the PE ratio is the net income multiple. They're trading at 25 times PE. Pretty fair. But the best part is really just the money they print. I mean, they're making easily 27 billion plus a net income every quarter. And what is Google doing with 27 billion of after-tax net income a quarter? Well, since they're, you know, too big to acquire a company, they just started paying a dividend. So the dividend only costs 2.5 billion. That's an under 10% payout ratio. They have so much room to raise their dividend in the future. And since they're spending so little on dividends, they're plowing money in share buybacks. This is the best part. Literally 14 billion in net income every quarter solely on share buybacks. They're spending 5 billion a month on share buybacks. Here's what that does for you. If we go to the net income is up by 19, but the net income per share is up by 22.2. That's insane. Whenever they buy back shares, it gives you more ownership in the company, makes the PE ratio go down, and makes the EPS go up, makes the cost of the dividend go down. I mean, it only helps out the shares. Basically forces the stock price to go up. You love share buybacks. Okay, what is PTLO? Is that Portillo's? Yeah, hey, I'm staying away from the restaurant names. You know, you look at Wendy's, you look at Jack in the Box, you look at Krispy Kreme, you look at Papa John's Pizza. They're all at like all-time lows right now, and it's unfortunate. The QSR industry is getting hurt. You know, this one, at least they're still making net income, which is good, but barely any net income. Like, look, 10 mil, 4 mil last quarter. A couple mil a quarter. Yeah, rip Wendy's. Yeah, look at Wendy's stock, WEN. It's just like it's that stock is kind of just following what the whole restaurant industry is doing. You know, it's not just like the quick service ones, like Chipotle as well. Look at Chipotle. I mean, they gap down on earnings, like Kava, Sweet Green. It's tough. You know, my best bet for that industry is McDonald's. That's the stock I love. Actually, how's Papa John's Pizza doing? We ordered their pizza last night. Oh, it's PZZA. Yeah, yikes. Papa John's Pizza. At least it's not doing as terrible as some of the other ones, but still pretty terrible. KO and MO. Yeah, hey, a lot of the defensive names like Coca-Cola did good on Friday. You know, with the tech sell off like crazy, Coca-Cola was up by 1%. I actually own the Coca-Cola bottling company, Coca-Cola Consolidated. I've been talking about this one for a while, ever since I've been dollar cost averaging into it. You know, I recommend if you want to buy a stock, you know, instead of just spending all your money on one day, you know, slowly buy into it. That means you dollar cost average. And this is one I've been buying. But yeah, Coca-Cola's the way higher dividend yielding one. This is the one that, well, actually here, I'll just show you. You know who approves this message would be the homie Warren Buffett. You know, obviously he's worth over anyone worth over 100 million has to make all their trades public by SEC law. And he just bought some UNH and stuff, but we can see his exact portfolio. His main holdings are in these super higher yielding names like American Express, Bank of America, Coca-Cola, Chevron, and 8.95% of its portfolio is in Coca-Cola. So here's what's cool about this stock. You're buying this mainly like for the dividend. If we go to the yield, you get a 2.98% yield, basically 3% yield. So you get a 3% dividend, and then you're hoping for another 2 to 3% stock price appreciation. So 3% in dividends, then you hope for 3% stock price appreciation, maybe 1% in buyback. So maybe 6 to 7% returns a year. Again, I don't expect this to really outperform the market in the long run, the tech-heavy S&P, but you get the nice yield safety. What app is this? Hey, what up, Hector? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. It's a brokerage where you get stocks on. Between Google, Nvidia, and Amazon, which is the best upside? Hey, what up, Alberto? Yo, one that I am definitely looking to buy more of. I'm actually looking at Amazon specifically. So, yeah, I've also, I've been buying some shares the past couple months here. So yeah, I do like Amazon as a great never sell. So yeah, that would be my pick for you, Alberto. Okay. Let's see. I just bought Amazon and I'm about to buy some more. Hey, nice, Looney. Yo, I agree. If your intention is to just never sell Amazon, it's worth buying right now, right here. They were down 5.5% on Friday. I came so close to buying a share, but instead I spent all my money on Murphy USA stock. Yeah, it is, Hector. Yes, sir. Let's see here. Improvement said CCCX. So this is Churchill Capital. This might be another BDC, or it's like one of those blank check companies. Let me check for you. Yeah, blank check company, basically just mergers and acquisition company. So they just bought an asset. So yeah, we go to the balance sheet. Their assets were 170K. Now their assets are 400 million. So they just bought something. Without that news, I don't know. I don't love the blank check companies, but the momentum's been insane. I mean, it went from $10 to $25. So, nice little double if you were in this one since the beginning. So anyway, I don't know. Maybe they bought some sort of crypto related asset. CCX soars as Citron highlights quantum opportunity. I don't know. Sorry, I wish I could give you more thoughts on them. Probably wasn't too helpful. It'll look great in 3 years. Yeah, I agree. SBAC. What is this one? SBA Communications. So this is another REIT. They're just like American Tower, just like is it CCL, Crown Castle. So yeah, you get a 2.2% dividend. This is your telecommunications kind of play. I believe they just do cell towers. Yeah, they're a specialty REIT, wireless communication cell tower REIT. Or not just cell towers, but like these antennas on top of buildings. You really look at the cash from operations for REITs. So I'd honestly rather buy like an AMT, an American Tower Corp, over this one. I've looked at all three of these before, but yeah, this is your cell tower play. Joey said, what happened to AAP? AAP. Oh, Advanced Auto Parts. Yeah, hey, maybe they source some stuff from China and they gap down. Yeah, this one's always just been not too great. Like if you compare this one to AutoZone or O'Reilly, this one is done awful. And I don't know if it's because of their dividends or what, but anyway, the stock is the same price that it was in 2009. Let me see the yield here. You get a nice yield, a 2% yield, but no, it changes every year. In 2020, it was $1, then $3, $6, then 2, 1. So dividend changes every year. Yeah, parts and batteries, engine maintenance. Yeah, it's just not a growthy business. It's a commodity everyone needs, but looks like people just aren't going. Yeah, the growth is gone. No way. Revenue's down 7.7 after it was down 19. Yeah, so the growth is gone and they're making no profits. Look at that. That's sad. I can totally understand why that one's done so bad. I'd probably stay away from that one. Yeah, Main Street Capital. This is a nice monthly paying dividend BDC. Out of all the BDCs, this one is my favorite one. I don't expect it to outperform the market in the long run, but I like this one because you get a crazy good yield. 7.6 per, well, it's a little lower. That includes the special dividends, but yeah, without the special dividends, you get like a 6% yield. Is your portfolio down a lot? Yeah, on Friday we were down bad, like near $2,000 on Friday. Hey, hit the like on the stream for me. Hey, by the way, if you want to hit the follow button, we stream every single day, even when the market's not open. Like today, we'll be streaming tomorrow as well. And by the way, I sell nothing. I have no course book, WhatsApp, Telegram. I'll never follow you, DM you. So yeah, watch out for people in person. Never knew it says you have your big players holdings. Yeah, Johnny9. Yeah, it's a cool feature. Are the tariffs affecting stocks too, or is it only messing with crypto? Oh no, it's stocks too. I was told M1 Finance is good for long-term and fractional shares. Yeah, hey, all these platforms, fractional share. M1 Finance, I've never used it personally, but everything you can do on there, you can do on these brokerages. This one's my favorite brokerage right here. Yeah, if you're looking for an app to, if you want to buy stocks, you need a brokerage to buy it on. This is my favorite one for the actual, it's like any brokerage you can just buy stocks on, but this one actually has so many cool features. Like you can see all the super investors portfolio, like the Nancy Pelosi tracker. You could even follow them into it, which is cool. And if you're looking for new stocks, there's so many cool watch list that you can find new stocks from and learn about it, like nuclear. Anyway, there's so many different anyway, let's keep going here. Yeah, if you want to get this, by the way, full disclosure, it's an affiliate link. So if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link. So if you go and deposit $100, we'll both get some free stocks. Okay, but you don't even have to deposit any money to use the features. Okay, and you get the APY on your idle cash. If you look at the middle of my screen, I keep my idle cash in here because it earns the APY. All right, so hey, what up, Fork? He said, can you go over CGNX stock? CGNX, Cognex. Okay, so they were down 12% on Friday. That's rough. Hey, what up, Ishwar? Any stock to get in on the crash? Hey, I got in Ferrari stock and Murphy. I'm about to make a YouTube video after this. Ooh, maybe we could look at Shopify or Spotify after this. We'll maybe look at Nvidia. Microsoft, I want to get to all this. So here's Cognex. Unfortunately, this stock just hasn't done too well. It's lower than it was in 2016. So yikes. Machine vision technology. The numbers look just a little choppy here. Let me go to revenue right here. So actually, good news. They are making net income every quarter, 30, 40 mil in net income every quarter. And look at the net income. This might be why investors are a little disappointed. The revenue is only up 4. Last quarter was only up 2.2 or 2.4. That doesn't really beat inflation, so single digit revenue growth. Oh, that's comparing to a holdback here. Yeah. So it's easy comps. It's not the end of the world. I like that there's, I can understand why this stock is the same price that it was in 2016 because the growth was, yeah, look at what happened in 2023. The net income collapsed, but look, as long as they can keep up the growth and really convince the growth is back, I'd keep it as a very small position. Hey, thanks, Pinky. I appreciate that. So yeah, hey, Ishwar, back to that crash. Yeah, here are the two stocks I bought. I bought Ferrari. Actually, I'm about to make a whole YouTube video right when the stream ends, and I'm going to end the stream in probably an hour. But I'll show you. I'm going to upload that video. The best way to support me, by the way, is just subscribe to my YouTube channel. I'm trying to build on my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. I'm also streaming on YouTube, so if you miss anything, you can replay it, rewind it. Sometimes I talk too fast. Sorry. So let's look at Spotify. What up? We'll look at APLD too. APLD is a cool one. But yeah, Spotify, this is that subscription music company. They've done incredible on them. I can understand it from the numbers, but they kind of have no moat. YouTube Music, Apple Music, like there's a lot of competition for them. Like YouTube Music literally is identical to Spotify now. Uh, but Spotify has a lot of premium subscribers. Check that out right here. So let me pull this up. Yeah, here's a cool metric we get. Their monthly active users are 696 million, and they have 276 million premium subscribers. They also have some ad tier users who see a bunch of ads. And they have 433 million monthly active users on their ad-supported revenue. So yeah, if we just go to their revenue right here, like good growth, revenue's up 20 after it grew 18. But the best part is, the basically net income. They're making basically a couple hundred million net income a quarter. This quarter, it says it was down, it was negative 100 million. It was a one-time adjustment. Operating profit was up 67, so it's definitely a one-time adjustment. It was at a new record pretty much. The free cash flow is insanely good. Free cash is up 56%. But another thing, Spotify doesn't also own their music. Universal Music Group actually owns the music, and they could raise prices. I don't love Spotify, especially at their valuation. I'd rather buy like a subscription plan. I'd rather buy Netflix or even Google. I mean, Google, they've done great though. They've done great. But yeah, I'd probably go with Google or maybe Apple stock. Yeah, I don't love them. Nancy Pelosi never goes wrong. Yeah, yeah. So Tanel said APLD. Yeah, APLD. Speaking of Nvidia, speaking of Nancy Pelosi too, there's the Nancy Pelosi portfolio again. She has to make all her trades public by SEC law. But Nvidia right here also owns a bunch of individual companies, and one of the stocks they own is APLD, and they just had some very good earnings. This is your data center hosting company. And APLD just signed an $11 billion deal with CoreWeave. Coincidence? I think not, because NVIDIA owns both CoreWeave and APLD. I'm sure they orchestrated that. But that's not the main reason they gapped up. The reason they were up 16% on Friday, that was, super bearish Friday, was because of their numbers. It was incredible. The orange lines are the analysts expected. The analysts expected 45 mil. They reported 64 mil. Insane beat. And they were expected to lose 13 cents in net income. They only lost 7 cents. So it was just a good beat on the numbers. I think analysts are happy with, data center hosting business, high performance, cloud service. So anyway, that's cool. I probably wouldn't buy them at all-time highs, but can totally understand why they're there. Good numbers. Beat on Yo, Compa Tommy, hey, thanks for the rose there. I appreciate that, my friend. Or yeah, let's do NVIDIA too. Yeah, well, let's do NVIDIA. So that's in the NVIDIA portfolio. So NVIDIA obviously down on Friday with the tariff news. So here's why they've done so great, though. Obviously, we know they sell GPUs. They have a 24% PC GPU market share, just went up from 20. So growing their market share. They also have an automotive software that any company can license. Not great for, it's like a competitor to Tesla, which is cool. Yeah, mainly this is a data center play, selling chips. Like, check out the revenue growth and the margins too. If you look at the revenue's up 55% after it grew 100. But out of this 46 billion of revenue, out of the 46 bill of revenue, 26 billion of it was after-tax net income from them. They have insane 56% net margins. That's because their main customers are the other Mag 7s. The most cash-rich companies, Google, Meta, Amazon, they're all handing over NVIDIA money. Oracle, XAI, OpenAI, pretty crazy. So I do love NVIDIA. But one thing, if I'm looking for exposure to semis, I actually decided to pick up AMD just because the law of large numbers. If we look at the top right, AMD is worth $350 billion, pretty fair, $350 billion market cap. But NVIDIA, if you look in the top right, is worth $4.45 trillion. For you to double your money on NVIDIA, they would have to be worth $9 trillion. So that's why I like AMD. Hey, Tingrika, no way. How's APLD? Yo, that's so sad. The literal last stock we looked at was APLD. So we probably won't look at them again. But if you do want to go on the YouTube stream, you can replay it just literally 2 minutes and you'll find it. We looked at APLD and then right after we looked at NVIDIA. Oh no. But hope you're having a great day, Tingrika. Happy Saturday. What app is this? Hey, what up, John? Yeah, hey, by the way, if you want to get the software I'm on, it's in the link tree in my bio, the first link there. What's this one here? Upwork. Okay. Oh wait, hey Adele. Wait, I want to look at this one. Adele, what is your opinion on GT? Thanks. Let's check it out. Oh, Goodyear tire, and then we can look at Upwork too. So hey, maybe we'll get to BE. I don't love BE stock, Matt. We probably won't look at BE. I have nothing good to say, but the stock's done amazing though. But here's Goodyear tire and rubber. Yikes. So, we just looked at Advanced Auto Parts, another kind of like auto part company that's struggling. It's just, dang, this stock is lower than it was in 2002. So you bought the stock in 2002, you're down bad, but let's see what they do. Or we know what they sell, just commodity, yeah. So it kind of makes sense now. So check this out. The revenue's down 2.3, and it's just declining. The lifeblood, the sales, just have been on a losing streak for a couple of years, and not just revenue. Oh, actually, really? Oh no, they didn't. So it said they made 280 mil in net income. Did they like sell an asset? They did. No way. That explains it. So that's actually not good. We're on the cash from investing activities, the CFI. If this number is positive, that means they're selling the assets they own. That means they're selling assets from their balance sheet. So they sold off some of their own assets for 400 mil. That explains why the net income was so positive when the actual core operating business operations were so negative. What's their long-term debt? The nasty stuff. Dang, 6.5 bill of long-term debt, I can see why they're at all-time lows. I wouldn't buy the dip on them probably. I'd rather own O'Reilly Auto Parts or something. Oh wait, Tingrika said something. What stock was that? Wait. CRML. What is CRML? And then we'll look at Upwork. Oh, critical metals. So this is kind of like an MP. This is another rare earth stock, kind of like MP materials that are hopefully they're rallying on the news for a government stake. Whoa, let's see. U.S. government takes stakes in critical mining companies. Basically, like MP Materials, Lithium Americas, the government can't allow these companies to go bankrupt now. If this one can manage to get a stake from the government, that'd be great. They might be, so it's a startup. Revenue. Revenue says no data. So they just own a mine right now that they've never gotten any money from. But I'm curious to see what'll happen. Yeah, it's a rare earth mineral play. Nice. Which have been all momentuming. So Upwork, this is your car loan company, I believe. They're like some AI. No, actually, this might not be. The stock is the same price that it was in 2019. That's Upstart. Wait, what is this company? Internet content. Wait. A business to find, hire, and pay freelancers. Oh, it's like a Fiverr. Oh, okay. Upwork, it's kind of like a Fiverr. Freelance or outsource your work. Okay. Let's see how that's doing. So revenue isn't growing. The revenue, yikes, that's actually not great. Like this quarter was only up 0.9, last quarter 0.9. That does not beat inflation, but they did make real profits, 30 mil, 37. They didn't actually make 140 mil here. They only made 13 mil, but still they are profitable every quarter, which is good news. So yeah, they're kind of like a competitor to Fiverr. Not something I'd see outperforming in the long run, but what's that other company? Robert Half, I think. Robert Half. Okay. Is it RHI? Robert Half. Yeah, this is another sort of wow, the stock's done terrible. Staffing, employment services. All right, whatever. Oh, nice. Your stream is cool. Subbed. Hey, thanks for subscribing. Yo, hey, by the way, if y'all want to hit the follow button, hit the subscribe button. We stream every single day. We just look at stocks. And by the way, watch out for people impersonating me. I'll never follow you, DM you. I literally sell nothing. I have no course, book, WhatsApp, no private. I don't got none of that. So, all right. Everyone wants GPUs for AI. Yeah, you're right. So, let me see here. Heather said, what do you think of cake stock? Hey, the Cheesecake Factory. You know what? This is a restaurant stock. Every year on my birthday, I usually go to the Cheesecake Factory. But they don't have the growth that I'd like to see. That's why the stock is the same price that it was in 2015. The reason the stock is flat is because they're not growing to. And I'll just say the numbers for yourself, and you can draw your own conclusion. Again, I just don't see this company really outperforming the tech-heavy S&P. But check this out: their main source of revenue, obviously, is the Cheesecake Factory restaurants, and that revenue, like, it's it's only up 0.9. Last quarter, it was up 0.7. 1.63. So this doesn't beat inflation. Like, they're just not as growthy, I think, as investors would like. But what's cool is you get a nice yield, an over 2% dividend yield. They are making net income every quarter, which is good. I would just rather buy like a first off, like a Texas Roadhouse is a better one. But also I like Yum Brands, different franchise model, but Yum Brands owns you've heard of them, Taco Bell, KFC, Pizza Hut, a bit more diversified. So yeah, and you get the same yield. With the other stock, you got a 2% yield. You also basically get a 2% yield with Yum Brands. My best pick, though, would be McDonald's. McDonald's is the best. Hey, what up? Catherine said RDW is. I know that's Redwire. Let's check them out. No news on this one. I don't remember anything about this stock, actually. So let's go look at their numbers. So revenue. This isn't good. The revenue is down. So revenue's down 21%. Last quarter, it was down 30%. What industry are they in? Aerospace and defense. So it's in space 3D printing and manufacturing. What the heck? Yeah, dang, that analysts expected 80 mil of revenue. They only reported 61, but check out the growth. Analysts are expecting 151 mil of revenue in 2 quarters. So again, watch out for these next couple quarters. We want to make sure they start to, start beating on expectations instead of missing. That explains why they gapped down so hard on earnings day. The reason they gapped down so hard is because it was a huge miss on earnings. It was bad numbers. So for the next quarter, we hopefully want to see them beat expectations. But yeah, that's your aerospace, super small aerospace and defense play that we want to see growth come back to. Hopefully that was helpful. Hey, I want to get to Starbucks. I don't have anything good to say about them, but I do want to get to them. But Hogan said SoFi. What up, dude? Hope you're having a great day. Yeah, SoFi, I do own this one of my best performing stocks. Also one of my biggest regrets, because I regret every share I've ever sold of SoFi. And hey, Yerp, yo, shout out to the homie Yerp with the 28 roses. No way. If you got a stock you want me to look at, let me know there, Yerp. So here's SoFi, though, one of my favorite fintechs. If we go to where the revenue comes from, 42% of it is from their financial services. And I love the growth here. Like, it's up 105, after grew 80, after grew 220, after grew 280. Like, people are really taking SoFi serious. Like, not even the analysts expected that sort of growth. Like, here's the analyst expectations. That's the orange line. Every quarter they beat on what the analysts expect. They're beating on EPS, which is net income, every quarter. They're beating on EBITDA every quarter. Like, they're just booming. I just think people are taking them serious. They made 100 million net income. They're making net income every quarter. So that's your pure growth fintech right there. And I am biased because I own them. Hey, all that glitters is stone. No way. Hey, thanks for all the roses. He said, or maybe she said, SWKS. Oh, and Europe. Heck yeah. We'll go to UAMY. Their recent direct offering and tariffs make this look good. Hey, I was trying to research what they do earlier. I think that's a rare earth mineral play. We'll check them out of this for sure, Europe. Let's do it. So here's Skyworks Solutions. Let's see what this company does. The stock is the same price that it was in 2015. So the stock's not done too great, but this app is telling me there's some technical analysis. What is this right here? This is a bearish flag. So actually that sounds bearish. What app is this? Hey, Henry, by the way, if you want to get the software I'm on, it's in the link tree in my bio, first link there. But let's see, let's see what this company does. They develop, design, manufacture, and market similar proprietary semiconductor products. So it's a semiconductor play, and it looks like the growth is bad, it's negative, 2022 was their best year. 2021 was 5.1 bill. Now it's 4.18. So yeah, sales are like where it was in 2018. So that might be why the stock is the same price that it was in 2018, because the sales are at the same level. Yeah, it looks like the growth is kind of gone here. Look at that. They're still making net income every quarter, which is good, but net income's down 13 after it fell 38, after it fell 30, or after it fell 26. Yikes. After it fell 20? They've been on a streak of declining net income. Yeah. At least they're still making net income. we kind of just want to see the growth come back to Skywork. Oh, wow. Huge yield here. Check that out. Oh, a 4% dividend yield. Not too shabby. Not too shabby. So yeah, let's go UAMY right here. Yeah, no problem. All that glitter. Hopefully that was helpful. So UAMY, this is United States Antimony. They sell this, apparently this is like, these are minerals. But yeah, this is what I found interesting. Check out how the sales have really rocketed up the past year. I mean, it's comparing from small numbers, but still good growth. Revenue went from 3.6 to 10.5. So that's good revenue growth. And not only that, and this is actually real, they really did make net income the past 2 quarters. And when they lose net income, it's only 800,000. Like, they can easily afford that. They have a really good balance sheet. So I like the growth. I like that the government may take a stake. It's probably overvalued for sure. Like, the momentum has just been insane on this one. I don't know if it's worth 1.6 billion without a government stake, or I don't know. But these are one of the better numbers. Estate of John C. Lawrence. All right. Well, anyway, there's UAMY. I believe that's a rare earth mineral plate. Thanks again, Europe, for the 35 roses. No way, dude. Thanks, man. Oh, hey, yeah, hey, what up? Well, look at UiPath. Give me 1 minute here. What up, Ellie? Said PKX. Let's do PKX stock. Let's do it. Heck yeah. So not Costco, but we got Posco. Okay. Ooh, very cyclical. Wow. This stock is the same price it was in 2004. So, and you get a yield here, a 3% dividend. Okay, so this is not an American company. So we're actually going to convert their currency from South Korean or whatever Korean currency, and we'll convert it to USD, to US dollars. Let's see. Revenue is expected, this is still a crazy 13 bill of revenue, but revenue's down 3, after it fell 12, after it fell 5, after it fell 15. So they've been on a steady downtrend of revenue. That explains why the stock has done so bad. And the net income went negative. So if we zoom out, it used to be more consistent, but yeah, barely like these year-over-year declines are rough. I can totally understand why this stock is not done too well. I wish I knew off the top of my head. There's this steel play, and I forget the name, and I think Catherine always recommends it. But there's this one steel play that I love, but I don't remember the steel name. Dang it. What app is this? Oh, what up, Yeah, hey, by the way, if you want to get this brokerage I'm on, it's in the link tree in my bio, the first link there. It's where you buy stocks on. It's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. So Messi said, Apple has not been doing great. You know who owns Apple? A lot of the super investors. We go to Nancy Pelosi's portfolio. Anyone over $100 million net worth has to make all their trades public by SEC law and their exact weightings. We can see there's a reason these super investors have their largest holding is Apple. Nancy Pelosi, her largest holding is Apple. We go to Warren Buffett, his largest holding is Apple. If we go to the president, besides his company, his second largest holding is Apple. So there's a reason Apple is in the Mag 7. This is a great never sell stock. A lot of people are locked in the Apple ecosystem. I'm on an Apple iPhone right now. Great, just never sell company, in my opinion. Don't trade Apple, just buy and never sell it. So check this out right here. Obviously, we know they have a huge smartphone market share. Their smartphone market share is a 17%. They also make smartphone chips. Their smartphone chip market share is a 14. But yeah, literally 47% of all their sales come from their iPhone revenue. I love how they break this down. So 47% of the revenue comes from the iPhone, but the most valuable part of Apple is actually their services revenue. If you go spend $100 in the App Store, $30 of it goes back to Apple as legit a royalty, a developer royalty. And check out the annual revenue. It's nearly $100 billion of annual revenue for them. That's super high margin. We can see here's the difference between their, they sell hardware, iPhone is hardware, but then they have software, like the services and the cloud business. So what's it like the iPhone cloud, whatever that's called, the iCloud. Yeah, they have the Mac sales, the wearables, home accessories, and the iPad. Here's also why they're affected by tariffs. The reason Apple was down 3.5% on top of just a bad day is because I always thought it was more. Only 36% of Apple's revenue comes from the US, 25% of all the revenue comes from Europe. 17% of all the sales come from China. You ever notice in America, we don't allow Chinese phones. We completely tariff Chinese phones. Like, what if China one day is like, hey, we're not going to allow anyone in China to buy Apple iPhones? That'll never happen, in my opinion. Never, ever, ever happen. But I mean, we never see Chinese phones in the U.S. because we consider spyware and all that. But anyway, really good net income this company makes. Pretty much 25 billion net income a quarter. You get a growing dividend. You get insane share buybacks. You just get a stock that I think, like, would I rather keep my cash in a bank account doing nothing, or would I rather just buy Apple? I'd rather buy Apple stock, especially if you're on an Apple iPhone, invest in what you use. That's what I always recommend. Invest in what you use. If you're on YouTube, buy Google, or if you pay for Amazon Prime, buy Amazon Prime stock as well. Buying what you use. You like Coca-Cola, McDonald's, you maybe buy Ferrari stock. Hey, what up? POR, cheapest electricity play. Well, let's see. This is Portland General Electric. Let's check it out right here. Oh, and we got to look at UiPath after this. Hey, yeah, we'll look at UiPath, Mohammed. I am down bad on that stock. So here's Portland General Electric. I don't think I've heard of this company before. The stock has not done too well, but let's just go look at their actual numbers because that's all that matters. So yeah, they're trading at 16 times PE. Wait, so this is general transmission, distribution, and retail sale of electricity. So yeah, it's an electricity play. Revenue's growing pretty nicely. Yeah, so revenues, well, it's up 6%. Last quarter was only up 0.1. The net income is they're making good net income every quarter. It did fall, but still, they're making net income every quarter. Wow, you get a 4.65% dividend yield too. That's a good dividend yield. Let's see, actually, the stock is the same price that it was in 2016. What app are you on? Yeah, hey, STN, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. This is a brokerage where you get stocks. Cash from operations look great. So let's go look for ourselves how much the dividend cost. So they made, let's just average it out. Let's say they make 60 mil in net income a quarter. So they're making or actually they make a little more than that, but 75 mil in net income a quarter. The dividend cost 54 million. So as long as they make 54 million plus in net income a quarter, they can afford the dividend. So yeah, it's your retail electricity play. So UiPath, I am down bad on this company. So what happens is, hey, by the way, I've seen some people ask, hey, by the way, if you want to get this software I'm on, it's in the link tree in my bio, the first link there. It's where you buy stocks in a brokerage. It's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. But here's UiPath right here. This is one of my, of course, biggest losers. The CEO out of nowhere quit right here. Basically cash grab. But the sentiment's really been in favor toward UiPath recently because they've done a bunch of partnerships with like Snowflake, OpenAI, Google, and apparently UiPath platform named among Time's best inventions of 2025. But yeah, UiPath just did a bunch of partnerships with Nvidia, OpenAI, Google, and Microsoft and Snowflake. So pretty cool. I'm still doing research. I don't know if this company has much of a moat. They're still struggling with real profits. It's still a little bit choppy on the net income, but the revenues are growing. It's kind of coming back. Revenue's up 15. Here, I'll show you my position in this company for you. We are, yeah, look at that. We are down we're down $550 on UiPath. We're down 47% on Zoom. Hey, drop a like on the stream for me. Hey, I just love being fully transparent. Friday was rough. Here's our main, this is our Robinhood portfolio. If you look in the top, it's called dividend only. We were down 1.86% on Friday. Yeah, CEG was down 4. Our whole watch list, like QQQ, Nvidia, everything was red. Yeah, hey, by the way, if you want to hit the follow button, we stream every day. We just look at stocks and stuff. And watch out for people impersonating me. I'll never follow you, DM you. I don't sell anything. Only thing I do have is a YouTube channel. So best way to support me is just subscribe to my YouTube channel. Bryson said, yeah, you need to invest in Lockheed Martin. Yeah, Lockheed Martin is a nice aerospace and defense play. So actually, I'll just show you. This is a nice dividend growth stock too. If you go to the dividend right here, you get a 2.5% dividend yield. Pretty good. And look at where all the revenue comes from. Aeronautics, rotary mission systems, missiles, fire control, space. So yeah, but one thing, do you kind of want to see the growth come back? One reason they gapped down on their actual earnings day was because the earnings and the margins did disappoint. The revenue is only up by 0.1% year over year. So sales are only up by 0.1. Doesn't really beat inflation. Again, this company, the government can't allow this company to go bankrupt. But they're still making good net income every quarter, but the net income did fall and the margins did fall a bit year over year. Used to be a bit more consistent, but now it's falling. But anyway, I still like Lockheed Martin. I just like other aerospace and defense plays better for more growth. Again, sales are only up 0.1. I would rather go with the more growthier name. They also have a high dividend. But I still like them. Okay. New York, you said, I just saw Axon in your portfolio. When did you buy them? Hey, yeah, I bought Axon not too long ago. You know what? It was right here. Yeah, look at that. So we own one share of Axon. I can't tell you how overvalued this company is. More expensive than Tesla, more expensive than Palantir. But it's a company. I only bought one share, but I want to eventually make this more bigger size position. This is a company that sells police stations, body cams, dash cams, and they sell them not only like the body cam, but the cloud network to store it all on. It's a really unique business model. They've like pretty much a monopoly, no other competition. Like they have an exclusive deal with like the UK police force. And anyway, Axon's a really cool company. Nice growth name too. So Lucas said MTW. Oh, there's two different Lucases. Hey, well, you know what? We'll start with Lucas J. He said FLNC. And then to the other Lucas, we'll look at MTW after this. What's up? Hey, what up, DTish and Only Packs? What up, guys? So, TPL is a cool royalty play. You're right, Ryan. I have another cool stock I want to share with you about TPL actually works with LandBridge. And here's another cool company. If you like TPL, you'll like WaterBridge. WaterBridge works with TPL specifically and LandBridge. This is WaterBridge. Basically, they suck up, whenever you're sucking up oil from the ground, the most byproduct that comes the most is actually water. And they actually get the water and then sell it to different. Anyway, I'm looking at, they actually just IPO'd $2.7 billion company. Remind me, we got to get to TPL. Sorry, I'm getting way off topic here. But I just learned about them and I just was reading their investor presentation. But here's Fluence Energy. Let's get to this one right here. This stock, let's see, Fluence Energy 2. Oh, hey, Ryan, then you'll love WaterBridge. You should look up WaterBridge investor relations and go to their website. Scroll down and watch the video. It's so cool. I just watched it yesterday. Okay, but here, let's go back to Fluence Energy. What up, Lucas? So a $2.39 billion company. Hey, yeah, what up, Jim? What is he reading, chat? Hey, I'm reading both the YouTube and TikTok chat. He said nobody asked for Axon. Yeah, hey, Coors. Yeah, I'm reading the YouTube chat and the TikTok one. What's up? My buddy started WaterBridge. You're kidding me, Smitty. Hopefully, just give him a congratulations for IPO in his company. They're worth like $2.3 billion. So I keep getting distracted with chat. Let's actually lock in now. So here's Fluence Energy stock. They're the same price as they were in 2021. So they've been struggling. Their numbers I can understand why, because their numbers look choppy. Revenue is up 24%, but last quarter was down 30. Last quarter was down 48, but then it was up 80. So we pretty much want to take the annual revenue and kind of blend that together. So they are still struggling with net income positivity as well, but they did make, was that real? Yeah, it was real. They did make net income this quarter. Bit leverage. So Simmons, wait, is that like the actual company? I wonder if like that Simmons is the largest shareholder here. If that's true and Simmons is the largest shareholder, that'd be really interesting. But anyway, the numbers look a little choppy. Revenue from energy storage products. Oh yeah, let's go to annual basis here. So it is up from 20. Hopefully that was helpful. Looks like an energy storage play. I kind of got all over the place. Let's get to MTW right here. So this is Manitowoc. Yikes. So this one's at an all-time low pretty much. Yeah, dang, they're lower than they were in 1997 when they IPO'd. So you bought the stock when they IPO'd in 1997, you are down 20%. Yikes. So where are their sales? Half their sales are from the US. They sell new machine sales. and the sales aren't doing too well. It's down 9% after it fell 8.3. Yikes. So looks like the growth is gone. So revenue's down 4%. Are they profitable still? So yeah, basically no profits. It says this quarter they made 56 million in net income. They didn't actually make that. So I can kind of understand why this one's also at an all-time low. We really just want to see the growth come back. How much is this crash affecting you? Not at all yet. You know, we just have such good cost bases on a lot of stocks where I'm still good on my positions. Okay. What up? DJ says EBR stock. I want to try and get through all these here. Sorry, if I don't get to all the stocks here, I try to only spend like a minute on each stock so we can get to all these. Like I do want to get to PayPal. What is Comstock Resources? Hey, if you give me the ticker symbol, I'll try and get to that one. Brazilian Electric Power. So here's another electric play. I'm guessing their revenue. Yeah. So we're going to convert their currency from Brazilian to USD. And yeah, 100% of the revenue comes from Brazil. Let's see, the revenue is up 26%. So they're doing good revenue, $2 billion of revenue, but the profits, it used to be really consistent, net income positive every quarter, but now the past 2 quarters, the net income went negative. Again, I would rather buy a probably US utility over a Brazilian utility. So this is just a way to get, I wouldn't even, if I wanted to, wait, just Brazil as the largest shareholder, just Brazil, the country, I guess. Anyway, that's interesting. There's your Brazilian utility play. If that's right, the actual government owns it. Can you do super micro? I don't love super micro. Their margins just collapsed. Here's why I'd avoid super micro. I think they're falling. I think they're probably going to go back to 45 to maybe even $40. Hopefully not, though. You know, actually, there's been some good sentiment because, you know, OpenAI just had the huge AMD order. Oracle has a huge NVIDIA order. You know, a bunch of chip orders. And, you know, Supermicro and Dell actually install the chips, install the servers for you. But yeah, look at this. The revenue's up 7.5, but the net income is down by 35. What does that mean in English? It means the margins collapsed. Again, they just sell a commodity. Anyone could do it. But margins are to 3.3, down 40%. Yikes. What happens is, so hey, what up, Samani? Hey, if you want to get this brokerage I'm on right now, it's in the link tree in my bio, the first link there. Yeah, hey, thanks, Isaac. I appreciate that. He says, do you have any videos on how to get started? Yeah, hey, I do. I have a YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. I'm also streaming on there, by the way. Best way to support me is just watch the stream from YouTube instead of TikTok. I'm trying to build up my YouTube channel. But yeah, I have a bunch of YouTube videos, and right when the stream is over, I'm probably going to end the stream in like 30 minutes to an hour. But as soon as the stream is over, I'm going to upload a video on the 2 new stocks I just bought. Literally on Friday, I bought 2 new stocks for the first time ever. And those 2 stocks, I'll go ahead and share with you the 2. And then if you want to learn about why I did it, I'd really appreciate if you watch the video. By the way, I sell nothing. I have no course, book, WhatsApp, nothing like that. I'll never follow you or DM you. But yeah, we bought some Murphy USA, MUSA on the dip. And another stock we bought on the dip, of course, is Ferrari. So those are the 2 stocks we bought. So hey, watch out for my YouTube video I'm about to make as soon as this stream is over. I'll upload it to my YouTube channel. So XZR said, I'm loading up on Target even if they cut the dividend. Actually, one thing I like about Target is the dividend, but I don't love this company. It's like, I don't expect this to outperform. So if we go to the dividend right here, you look at this yield. This is actually a nice yield, and it is sustainable. For now, they have a 5.24% dividend yield. That's a really good yield, you know? So if you just get 5% of your money back a year and just dividends, then you're hoping for like 2 to 3%. You're hoping for any stock price appreciation on top of that. But what we've seen the past couple of years is, yeah, you got the 5% dividend, but you've lost more than 5% stock price appreciation, or well more than that. So your total return is still negative. But and here's why. If you look at like a typical grocery store, you look at Costco, you look at Walmart right now, those 2 grocery store stocks are doing really good. But why is Target doing bad? It's because they're not exactly a grocery store. They sell more discretionary items, like food and beverage is only 22% of the sales, or at least this is my hunch. You know, a lot of their sales are apparels, accessories, home furniture, decorations, beauty products. So random stuff like that, more discretionary stuff. And they're kind of just being out innovated. Walmart, anything you can get on Target, you can get on Amazon and Walmart, and Amazon and Walmart actually deliver you the stuff to your house. I don't know if Target has like an online delivery presence, but yeah, even if we just go to the revenue, the lifeblood, the sales, it's down 1% year over year. And the net income is down by 21, which means the net margins actually fell. Again, already a low margin industry, 3-4% net margin. So you're buying that for the dividend income, but again, I'd be careful. What platform is this? Yeah, hey, what up, Helios? Yeah, hey, if you want to get this software I'm on, it's in the link tree in my bio, first link there. Again, this is a brokerage where you buy stocks on. It's my favorite brokerage. By the way, all the brokerages I'm using are all in the link tree in my bio if you wanted to get any of these. I got Robinhood, Weevil, yeah. Okay, this one's the very first link in the link tree in my bio. This is my favorite one for actual, like, you can do so much analysis on here. Like, they have useful tools. It's the lowest fee brokerage, and it is an affiliate link. All the links up there are affiliate links, full disclosure. Okay, let's see. Hey, Jack, please tell me you did options yesterday. No, I actually do not do any options. I haven't done any options contracts in over a year. And hey, Coors said, can we do BABA? Let's do it. Sorry I didn't get to this one. Yo, Nathan, doesn't Progressive have earnings this week? Oh, you know what? Earnings season is back. Like, the next couple weeks are going to be fun from earnings. I can't wait. Oh, I do want to get to Kratos eventually. FTAI. Oh, hey, Fork. We got to look at that one always. I love that one. Oh, and then we got to look at PayPal too. PayPal's a buyback play at this point. But here's Alibaba. Of course, ADR. So you're paying that yearly fee, but no worries. Super small. But yeah, basically, remember on Friday, the market tanked because of the escalating Chinese tariffs. So that kind of explains why they tanked nearly 9% on Friday when you include the after hours. But yeah, this is your business to business e-commerce play. If we go to their net income, this is in USD. They've actually been making some good net income. If you average out, $4 billion of net income a quarter, you also get a yield now, 0.6% dividend yield. The PE ratio is fair as well. Where's the PE? Yeah, right here. This is price to net income, 18 times PE. Their active customers are 903 mil. But one reason, if we go to their actual earnings, this quarter when they reported earnings, they missed on every metric. They missed on revenue, they missed on the diluted net income, and they missed on EBITDA. But the reason the stock rallied up is because they're actually making their own chip now, like an Nvidia type chip. Imagine that, AliExpress GPUs for data centers. They said to fill the gap because Nvidia can no longer ship their chips to a lot of companies there, and they want to fill that void. Gabon said RYCEY. Yeah, this is Rolls-Royce. A lot of people think Rolls-Royce is a car company, but that's actually, I believe, not even part of this business. This is actually an aerospace and defense company. They make jet plane engines and stuff like that. So check this out. The largest source of revenue for them is their civil aerospace business. That's 47% of all the sales. And their second largest business is then their defense revenue. That's 24%. And then their power systems. So I love how diversified the revenue streams are. And, one of the reasons the stock has rallied up so much is because aerospace and defense, the whole sector has been on fire. Now, this is a UK company. They report in British pounds. And, so how they actually report in halves. So that's why it says 2025 H1. But so far, for this half of the year so far, that's the largest amount of net income I've seen. $6 billion of after-tax net income so far this year, highest ever. So great news. You also get a dividend, I think now. Yeah, 0.5% yield. So not too shabby. Trump meeting with Z is not canceled. Is that true, Matthew? When did that just happen? Did that news come out recently? You know what? I could just go over here. If I go to market, wait, no, it's over here. Wait, news. If I go to news right here, I can see the actual thinking machine. Okay, I don't care. All right. Yeah, hey, Isaiah, thoughts on the market crash? I think we're halfway through the market crash, this local one. So I'd be ready to buy the dip, Isaiah. I am ready. If you look at the middle market skin, I got basically 1K of cash. I'm ready to buy the dip. I already spent a little bit of cash on Friday. I nibbled on Ferrari, bought a share of them, and some MUSA. I actually sold out a DocuSign. Did anyone notice that? So I've just not been. I'll go over. I also go over this in the video that I'm about to release. But yeah, DocuSign is just being out innovated. They have no IP, no moat really. And OpenAI literally just created something called DocuGPT, an exact direct competitor to DocuSign, and the stock fell 12%. That's the exact day. The reason they gapped down this day, there was no earnings. It was on the release of DocuGPT, and literally after the stock fell to $70, under 60, the CEO, CFO, and COO all sold millions of shares. Well, I mean, what a terrible look. So I'm just like, I'm taking my profits and I'm dipping. Luckily, we bought these shares over a year ago and we sold it for a 70% gain. So all the gains were completely tax-free, even in the taxable account since they were long-term. And we made a nice couple $100, but yeah, sold out of them. Just wasn't happy with management. Bought a share of Futu on Friday. Hey, nice, Luffy. Yo, I almost did. And I want to buy more of them for sure. Hey, Prime Investing, what up, dude? I made 1,100 on SPY contract. Hey, really, only packs? That's crazy, dude. Yo, I know a lot of people are good at options, but not me. I'm not good at that. Oh, hey, what up, do down? We got to look at AMD too. I love AMD. Entry price on Ferrari, under $400 is incredible. That's lower than me. My cost basis is just over $400 on Ferrari. So, okay, here's Waste Management. This is a great never sell stock. Even if we go into a recession, even if tech falls or whatever, people still throw away their trash, especially Americans, and basically all the revenue comes from the United States. This is an industry that like AI can't come for this business. ChatGPT can't come for waste management. I don't think. But yeah, basically, it's as safe as it gets. Warren Buffett loves this company. Bill Gates. Bill Gates owns the Bill and Melinda Gates Foundation owns 8% of all the shares. They're making easily, $700 million in net income a quarter, and you get a 1.5% dividend. Pretty cool. How are the gains tax-free? Sorry if you already said, hey, I actually didn't really explain that. So great question. Someone said, hey, you said you sold DocuSign for 100% tax-free gains. How is that possible in your taxable account? So yeah, I sold DocuSign for a 70% gain, and all the gains were completely tax-free because they were long-term capital gains. I bought all my shares of DocuSign over a year ago, and if you hold your shares for over a year and you go to sell it, it's taxed at long-term capital gains, and only if you make under $48K a year. And that's me. I make well under $48K a year. If you make under $48K, this is why I try to stress this and say this all the time. Taxes favor investors, especially low income. But if you make under $48K and you sell a stock after holding it for a year, it's completely tax-free, even in a taxable account. How do I know? Because I also just pay taxes. And the same thing is for dividends too. Whenever you receive a dividend, even in a taxable account, and it's a long-term capital or it's a qualified dividend, like all these stocks in here all pay qualified dividends, Meta, Google, McDonald's, all of them pay qualified dividends. It's all tax-free dividend income. Pretty cool. Hey, Isaiah, no way, dude. Thanks for all the gifts there. The finger heart. Hey, if you got a stock you want to look at, let me know, Isaiah. I appreciate that. So let's keep going here. Good Time said, what are we buying? Hey, I'm buying Ferrari. That's what I bought. And Murphy USA, probably a stock no one's ever heard of. So yeah, can you speak on race as a buy now? So you know what? I got you. By the way, I'm about to make a, does that include 48K from, your total income, if your total just revenue, even from your job is under 48K, then it's completely tax-free. But even if it's over 48K, you pay 12% tax on just the amount over 48K. So let's go over Ferrari. Let's do it. Thanks again, Isaiah. I'll go into more detail about why I love Ferrari on my YouTube video as soon as this stream ends, I'm going to publish that video. So I'm kind of fresh on knowledge. You know what? I'll tell you what I love about this one. A lot of the revenue, like 15% of the revenue, comes from their sponsorship revenue. Whenever you go to a Ferrari race or whatever, a bunch of companies like AMD pay a lot of money to network with new people, to sponsor on their cars, get talked about at the race. And those, because they're advertising to the most high net worth individuals, the hardest ones to market to. So anyway, people pay race a lot of money for obviously sponsorship stuff, but their main business is obviously their cars. I didn't just buy Ferrari because the stock fell. I bought it because they have good fundamentals. And again, one of the reasons they fell is because I do want to share this. Ferrari projects only 5% annual revenue growth CAGR through 2030. So for 2030, I believe this was so conservative estimates. But anyway, a lot of their cars, if you buy them right now, you can't get those cars for 1 to 2 years. Like a lot of their cars are backlogged for multiple years. They have so much pricing power. They don't just sell you a car. If anyone wants a car to get them to point A to point B, like just no one's buying a Ferrari. They don't just sell you a car. They sell you the best car, and they market it anyway. They print money, 500 mil a quarter, especially at this growth rate. It's going to be over 500 mil in net income a quarter. You also get a near 1% dividend. They raise their dividend every year. They are a European company, so they only pay a dividend once a year, or maybe it's every 6 months. But anyway, I bought this one for the numbers, the pricing power. If we go into a recession, also Ferrari has the ability to raise prices, because their consumer, the people buying Ferraris, aren't affected by tariffs are affected by a little bit of inflation. Anyway, I go into more about that on my YouTube video. So this is my high net worth individual pricing power play, where even if there is tariffs, they can hopefully raise prices to offset that more so than your average typical stock. Okay. Human said, what app is this? It looks useful. Hey, yeah. Hey, by the way, if you want to get this brokerage I'm on, or this is a software, it's in the link tree in my bio, the very first link there. Yeah. Yeah, no problem. All that glittered. Appreciate you. So yeah. Buy now or wait till Monday. Hey, well, you kind of have to wait till Monday, but yeah, I bought a share on Friday right here under 300 or under 400. It's a good buy. I'm not loading the boat yet. I wouldn't make it a meaningful, huge size position yet, but I've already started to nibble. It's worth nibbling on now, I think, is a little bit. Another stock I think is worth nibbling on now is MUSA, and I did just buy some of that. Hey, and I'm totally biased, but I'll make a YouTube video. Is the 48K just stocks, or no, that's your total salary. Yeah, human, I'm talking about your total salary. But what's cool is let's say you no longer have a job and your only income is dividends. Like let's say you have no job and all you have left is your Verizon that pays you 48K a year. So let's say you make 48K a year just from Verizon dividends. You won't believe this, but that 48K you receive, since it's a qualified dividend, you make 48K a year tax-free, no matter the state you live in, no matter what. It's not taxed federally, state, no matter what, no matter where you live. If you make 48K or less in just qualified dividend income, it's completely tax-free. And also that 48K number that I was talking about goes up every year. They actually just released the 2026 ones and it was 50 something. So every year by law, they also raised that 48K number. Okay, someone said, can you explain why you bought Murphy? Hey, I'm actually going to do that as soon as this live stream ends in about 20 minutes, I'm going to make public a YouTube video where I go over fully Ferrari and MUSA. This is my favorite oil and gas play. Quick fun fact about this stock. The reason I bought them is because of their good financials. It's my favorite oil and gas play, but literally you won't believe this, since Q4 2019. So as soon as 2020 started, this company has bought back 36.5% of all the shares. The whole entire company, they bought back 36% of the entire shares. They're unlike your typical oil stock where they don't suffocate themselves with a huge dividend payout ratio. They have a 0.5% yield and only a 7% payout ratio. And they raise the dividend every year, but the main winner is the share buyback. Such a shareholder-friendly stock. I love them. They're also opening up 50 new stores. They're a more convenient store. Watch out for my YouTube video, whatever they say. By the way, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. I'm streaming on there as well. Is he live on Twitch and TikTok? No, hey, Colin, I'm only live on TikTok and YouTube. Maybe we'll do Twitch one day. I don't know how to do that, but yeah, I'm streaming on YouTube and TikTok. The number one way to support me is just watch the stream from YouTube. I'm trying to build on my YouTube channel because TikTok keeps randomly taking down my streams. They remove my streams from For You page eligibility recommendations all the time, and I just so yeah, best way to support me is just watch the stream from YouTube. I'm trying to build that up. So Delta Airlines long term, yeah. If you have a long term mindset, you have 10 years till you retire. Don't even think about the airlines. These just don't do good. Low margin, federally regulated, never outperforms. Out of all the airlines, I will say Delta Airlines is probably my favorite. Because they actually make the most consistent net income. For the past year, they've actually made net income every quarter for the past year. But all the other airlines are really junk. Here's the whole airline ETF. The JETS, the Jets ETF, owns a bunch of airlines and don't do good. So honestly, if you have a long-term mindset, I would go with I would rather just buy the S&P 500, something like techie, So, are you not able to mention PM because of, yeah, hey, I can't talk about what they do. I can look at the stocks still, though. Yeah, hey, Marcus said JD, the Chinese retailer. This isn't one, I don't love this one. First off, you want to buy an American retailer, not a Chinese one. First off, but you're buying this for the dividend. You get a nice yield. Look at that, a 3.2% dividend. You do pay the yearly ADR fee, but they traded a little multiple because they're Chinese. 8.8 times PE. Let's see, net margin. Yeah, wait, the net income did fall 49%. Is that real? Well, actually, the operating profit, that went negative. So that, anyway, I just would I'd much rather just own Amazon. Like, I'd rather buy Amazon. Yeah. Hey, what up, Angel? I agree. Or Angle, Angle. Or no, I can. Okay, SoFi is a wealth builder. Yeah, I do love SoFi. Hey, Lee said OSK. Let's do it. So, do you like Apple? I love Apple. Great, never sell stock. Don't trade Apple. Just hold it forever. So here's Oshkosh. I've never heard of this company before. Oshkosh. What do they do? Let's go find out. So farm and heavy construction, but they're also in the military and defense industry. Armored vehicle weapons. I like how they actually show like the chain of the industry. But let's just go down here and see. So Access is 45% of the revenue. That's down 10% year over year. Then they have the vocational. That's up 15% year over year, and then transport revenue. Well, let's just go to their total revenue right here combined. So on average, the total revenue is down 4% year over year. That might be why the stock has been flat since 2021. The stock has been flat, maybe just because the growth is slowed or it's negative, But net income is amazing, easily 100 to 200 mil in net income a quarter, and whoa. They're on I'll put them on the watch list. They're pretty cool. 1.5% yield, safe payout ratio. They're interesting. What site are you using for this research? Hey, what up, David? By the way, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio, the first link there. Yeah, it's my favorite app to do research. It's not just a brokerage, but there's so many cool like research tools on here. Yeah, you can see all the like super investors portfolios and stuff like that. So let's see. What do you think it's a good ratio of dividend yield and dividend growth? Do you look at years of consecutive dividend? Yeah, I do like to see a company with some couple years of dividend growth. Like Powell Industries, for example, though, only has, 1 year of dividend or maybe 2 years of dividend growth. But, I just like here's what I look for. I look for a company that pays a dividend but has a low payout ratio, so where they still can grow. Like a company with the low payout ratio that still leaves them room to do share buybacks and reinvest in the business without having to dilute you as your shareholder. Like you look at UPS, you look at some of these other stocks with high dividend payout ratios, and it just suffocates them. Some of the oil stocks too. So that's why I like MUSA is my new oil play. Okay, is that, yeah, hey, IDKY, it is. Yes, sir. Yes, sir. Oshkosh Bigosh, you are too young for those commercials. Yeah, it must be. PG or Johnson and Johnson are better than JD. Well, yeah, they're in different sectors, but yeah, dude, Johnson and Johnson's at an all-time high after they spun off Tylenol. I guess that was a good move. 2.6% yield too. I love AbbVie right here. Yo, AbbVie's a unique play. I can't stress how great of a company AbbVie is. Like, if we even go into like tech sells off like this, AbbVie will still do good. They're a healthcare play with like a 3% yield. How do you feel about paper, gold, and silver? GLD. Yeah, hey, I love those. I've actually here. Oh, actually, I'm going to save you some money, Gregory. Hopefully, this will help you out. This will be your price of admission or whatever they say. So here's GLD right here. Actually, instead of GLD, oh yeah, I already have it pulled up. Buy IAU. If you're wondering what is GLD, what is IAU, it's literally the commodity of gold, but in an ETF. It's always been more efficient to buy the ETF of gold than to buy physical gold. Because first off, you buy physical gold, you're paying the spot fee prices when you buy and sell it. If you buy gold in smaller quantities, you're really getting screwed. And also, if you have a lot of gold, you're not keeping that under your mattress. You're paying for storage somewhere. So anyway, this ETF, GLD, is literally the commodity of gold just in an ETF form. It's a great product. But if we go to their expense ratio fee right here, I want to, oops, I might have just disconnected from my Apple Play, from my Apple TV. Oh, no. Okay, we're good. Sorry. But yeah, if we look at this expense ratio fee, you're paying a 0.4% expense ratio fee. But if you go to the BlackRock version of gold, which is ticker symbol IAU, again, it's the exact same thing. We saw the two different stock charts next to each other. You save $15 a year per $1,000. You're saving $15 a year in expense ratio fees by going with IAU, which is run by BlackRock and JP Morgan. So anyway, that's your gold ETF. Hopefully that was helpful. The gold is really seen as a safe haven asset right now, with tech falling off. I think if we go to the safe haven watch list, I'm not going to be able to find it. But anyway, yeah, gold's doing great right now. I did say I wanted to get to PayPal. What up, Maxwell? So PayPal, this is a huge buyback play right now. You ready for this? Sadly, the stock is the same price that it was back in 2017. It looks like, DocuSign. It looks like Roku. It looks like Peloton, where they all peaked in 2021, but have just been down bad ever since. Yo, Isaiah, no way, dude. With the heart signal. Yo, heck yeah, we'll get to BX after this. I think that's Blackstone. Blackstone's just like BlackRock. We'll check them out after this. Can you trade on weekends or no? No, you can't. So you're right. The market is not open right now. Here's what I like about PayPal. First off, they traded this like commodity multiple, 14 times PE. They're not really expected to create or lose you any value. The reason the multiple is so cheap is because they're just not really growing too much. Sales are up 5% year over year. Last quarter, the sales were up 1.1. You add inflation to that, that doesn't really beat inflation, but the net income is good. They're easily making over $1 billion in net income every quarter. And what is PayPal doing with $1 billion in net income a quarter? Well, since they don't pay a dividend, they're deploying it all in share buybacks. I mean, this is insane. 1.2 to 1.5 billion in net income a quarter on buybacks. Here's what it does for you. Here's what this does for you. Yeah, you're right. Next day, why isn't PayPal much higher with Venmo and other? Yeah, they own Venmo, Honey. It's the slowing growth on PayPal. Again, this revenue, 1% last quarter, 4%, 5%, barely beats inflation. But the best part is, here's the share buybacks. Here's what I was trying to say. If we go to the net income is up by 12% year over year, but the net income per share, when it loads right here, I think it's up. Remember, net income's up by 12. The growth rate of the EPS and the net income should be the exact same. The only thing that changes it is either the share count goes up or down. And that's how the net income's up by 12, but net income per share is up by 19. They've bought back 8% of the company in the past year. I can't express how great that is. I love buyback companies. So let's go over Blackstone, Isaiah. Thanks again for that huge gift there. I really do appreciate that. Chase said, I need IONQ. Oh, hey, IONQ, Amazon owns a bunch of them, like 100 million of them. Is the same company, didn't they make children's clothes? Okay. Yo, remind me to look at TAC, Canadian AI Data. Remind me to look at that one. I do still want to get to Apple, SEHD as well. That's an ETF. So, we'll look at AEM. What up, Heter? What up, dude? We'll look at AEM too. So here's Blackstone. They're an asset manager. A lot of the assets they manage, I believe it's like real estate. And let's go check it out. I need my water. So here we go. 35. I like how diversified that this is. Yeah, private equity is 35% of the revenue. Then they own real estate. How's that doing? Probably not great with the high rate environment, or not super growthy right now. Oh, and then they're in credit and insurance. I do like that. The growth rates the past year have been very impressive. Wow. If we go to this on an annual basis, look at that. Every year it just hits a new record. So the credit and insurance business is doing well. So if we just go to their net income down here, easily they're making 1.3, 1.6 billion in net income a quarter. Let's go see how much the dividend costs. Let's see if they're doing any share buybacks too. So the dividend cost 1.22 billion of net income a quarter. It costs 1.22 billion, and they're even doing a little bit of share buybacks too. So nice. Real ones use Zelle. Hey, what up, Trevor? Wait. Oh yeah, let me go to SEHD real quick. Then we'll look at we'll look at Adobe. Oh yeah, Adobe's nice too. Yeah, Adobe is one of the software names getting hurt right now. So here's SEHD. This is a dividend growth ETF. So if we go to the top, or if we just go to the dividend yield, you get a 3.9% dividend yield. Not too shabby. And an ETF, again, is just a basket of stocks. And here's what it owns. First off, I love its largest holding. AbbVie, please never change it. Please always keep it at AbbVie because this is like the best stock out of all these. But yeah, they're SHD also has a weird rule where they don't let their winners win after it gets below. If a stock goes up, the yield goes down, and when the yield goes down, they sell it. And they've done a lot of these, but like their largest holding, 5% of this ETF used to be Broadcom, and then they sold all the Broadcom. And that Broadcom, if they didn't sell it, so like I was doing the math earlier, this ETF, if they just kept all the Broadcom, it would be like way higher, like 20-15% higher if they didn't sell the Broadcom. But anyway, so first off, point being, this will never outperform the actual S&P 500 in the long run just because of the new rules about how the company works. But you're buying this for the dividend. It has Merck, Cisco, Altria, Coca-Cola, Chevron. Yeah, Chevron, Coca-Cola, a lot of the Buffett type stocks. I like it. I like a lot of its holdings though. Okay. Yeah, so if you're still like 10 years away from retirement, I would go with the S&P 500 over SCHD. Is this an app? Yeah, hey, James, this is an app, or basically it's a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the first link there. But here's Agnico Gold. Yeah, pretty much this does exactly what gold does. We'll actually compare it to, the price of gold is just IAU, and we'll compare it. Actually, it's done a lot better than gold. Look at that. Orange line is the actual commodity of gold. Or, well, actually, on the weekly, they look pretty similar. Do they have a dividend? So look at that. It's like you get exposure to gold with a dividend. So they have a 0.97% payout ratio. So basically a 1% dividend yield. Pretty cool. They own a bunch of mines, Detour Lake, Canadian. So yeah, all these different mines right here. Pretty cool. So yeah, that's a way to get exposure to gold with a yield. If you ever think about buying Uber or DoorDash, I have come close to that. I really do love Uber stock. Uber is they also own Grab. Uber has stakes in a bunch of different companies. But yeah, let's check this out right here. Uber is a great never sell company, great software name. They're still growing. We can see their monthly active consumers. So not just monthly active users, but people who consume their product. Monthly active consumers are at 180 million, when the same time last year it was at 156 million. Every time you just go and book something, you go book Uber Eats or a ride, the delivery revenue is the Uber Eats business. This continues to still grow. Like we thought this would stop, short, or we thought the growth rate would maybe slow down after COVID, but the delivery revenue is up 25% year over year. Like the growth is still here on Uber, so that's really impressive. And not just every time you go and book a ride or something, they just collect a super high margin fee. So if you go to the FCF, which stands for free cash flow, it's insane. The growth rate's $2.5 billion of free cash flow a quarter. They're making over $1 billion in net income a quarter. So Uber's just a great software name. And actually, I'm going to re-add them to my watch list because I do want exposure to them. I really do. Yeah, DoorDash has an exclusive partnership with McDonald's where if you go on the McDonald's app, and I actually just tested this like a couple weeks ago, you can basically on the McDonald's app, you can order food through there without having a DoorDash account. They network through DoorDash, but you never even have to make a DoorDash account or even have the DoorDash app, and it still works. Okay. How about AT&T? Yeah, hey, I don't love this one. This is a stock, another one. If you're like 10 years away from retirement, you don't want to really buy this one. Like AT&T stock is the same price that it was back in 1997. So what's the yield though? So you get a 4.3% dividend. The dividend is safe. They have a safe 4.3% dividend, but you don't really outperform the tech-heavy S&P 500. You buy this when you retire, when you need income. So yeah. Hey, what up, Bingus? What do you mean, man? What's up? So someone said NVO. Oh, hey, what up, dude? He said NVO stock. So that's actually the company that owns Ozempic. Let's do it. Oh, hey, remind me to look at ACN. Bobby, yo, what up, Bobby? Said APLD. We got to look at Bobby too. Good to see you, friend. So here's Novo Nordisk. This is that weight loss company. So if you've heard of Ozempic before, you know Elon Musk is on Ozempic. If you've heard of Wegovy, well, this is the actual company that owns it. If we go to where the revenue comes from, 93% of all their sales are from their diabetes and obesity care products. But if you're wondering, like, hey, why we just looked at the stock price, why has the stock been on this nasty downtrend? What explains this? Why is the PE right here, the net income multiple, so industry average low? That's because I was looking at the Morningstar research on this. Actually, the Morningstar research is right here. You can kind of read what like the bulls say. What did the bears say? You can read about the moat and all that. But basically, they lose their exclusivity. They lose their patent for Ozempic in about 3 years. So they're already seeing a lot of increased competition from Zepbound. But but I think it's mostly priced in. I think that's priced in for the most part. I would nibble. I wouldn't have this as a huge position, but they're printing money, $4 billion plus a net income, 3% plus yield. Which is this app? Yo, hey, Uriel, what's up, dude? Yeah, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the first link there. Or you can just type it into Google. It's just a brokerage called Moomoo. Let's see here. Oh, yeah, hey, thanks, Cam. He said, oh, yeah, you're right, Edward. And Zio, what up, Zio? Good to see you, homie. So, yeah, that was Novo Nordisk right there. We'll look at a few more stocks, and I do got to go, unfortunately. Hey, watch out for that guy in chat there. Hold up. I didn't even see that guy. Oh, man, got to report him. Okay. Yeah, hey, by the way, watch out for people impersonating me. I'll never follow you, DM you. I don't have any like course, book, WhatsApp. I don't sell nothing. Watch out for. Okay. Oh yeah, PSIX. What up, Isaac? Yeah, actually, let me show you that over here. I do own some P6. Where is it? Yeah, I have 5 shares of this company. This is one of the fun money stocks where, as much as I love this stock and love their fundamentals, I don't want it as a meaningful size position. Just like Supermicro, Clear Secure, P6, these are perfect fun money positions for me. Where as much as I love them and I want exposure to them, I want to make them small positions, like couple $200 to $300 positions, and then I let them grow into meaningful size positions. But here is why I bought PSIX stock. I bought them the day I bought them, they hit an all-time high on the day I bought them, and they just continue to hit all-time highs. I thought this was the kind of company to do that because the growth is back. Check this out. I mean, this is what I trust. This is what I look for in a company. This is really good. Sales are up 73%. Last quarter was 42.37. So the growth is back, but revenue is up 73. But net income is up 137. Check out the growth. 50 mil in net income. What's the market cap again? The whole company's worth $2 billion. Yeah, they're trading at 17 times net income. Anyway, I just like that. They had a nice, beat on expectations. Look, orange line is what the analysts expect. Analysts expected 136 mil of revenue. They reported 190. Big beat on EPS, which is net income. Big beat on EBITDA. So it was a triple beat quarter. No wonder the stock kept up on earnings. So I love that one. And again, as much as I love them, like SoFi too, as much as I love these kind of stocks, I don't want them as super meaningful size positions. I keep them as small positions and I let them grow into meaningful size. By the way, I love being fully transparent. We got a lot of winners and we got some losers in here as well. Here's our lifetime performance. If you look in the top left, our open profit and loss, we're only up 17% all time. We've definitely underperformed. So I just like being fully transparent. Okay, a few more here. Oh yeah, ACN, Architecture, or whatever it's pronounced, Architecture. So this stock did miss on margins this quarter. If we go to net income right here, analysts expected 290 and they reported 225. And this wasn't like some one-time adjustment either. Like they really only made 225. Yeah, they still good money still. They still made a crazy 1.45 billion in net income, but it did fall 14%. So that's actually the reason they gapped down on earnings and kind of explains the downtrend. But they kind of just they oh dang, it's gone now. But they just acquired a company. It was like some AI company they bought. So Architecture did just buy a company. They can easily afford it. That's what I like about this stock. First off, you get a nice yield, 2.5% yield, but they also do a little bit of M&A, but we do want to see the margins. Like if you go to their net margin fell from 10 to 8, and that was why the stock has probably been struggling. But yeah, I like that they're buying companies. The risk reward's probably it was pretty decent here. What's your favorite speculative stock to buy after the dip? Well, here are the two stocks I bought, Ferrari and Murphy USA. And by the way, I'm ending the stream in 10 minutes. As soon as the stream ends on my YouTube channel, I'm doing a video. I'm going to make the video public on my full analysis on Ferrari and Murphy USA on why I bought them. By the way, best way to support me is just subscribe to my YouTube channel. I'm trying to bid on my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But yeah, I'm about to make a whole YouTube video about that. We'll probably look at one or two more stocks here. Oh, hey, what up? See, he said TAC stock. Let's do it. And Winston said, you think stock market will crash on Monday? I hope we get some sort of good news over the weekend, Yeah, we'll probably either gap up or gap down on Monday. I think we're halfway through the dip. I think we could probably fall another. We want to probably get to that 5% total dip off all-time highs, but I'm ready to buy the dip next week. I will be looking in the week after. But so here's Transalta. I don't know what this company is. I've never heard of them, but congrats if you own this stock because they're at an all-time high. And even in the after hours market, they were up another 9% in the after hours. So they must have, or maybe they didn't report earnings. I don't know. What did they do? So they're a gas, a hydro, energy transition, wind and solar. So it looks like a big energy company. Let's go to revenue down here. So revenue is down 25%. The net income went negative. Did analysts expect that? Oh, there is no expectations for revenue, but there is on net income and EBITDA. The EBITDA actually had a really big beat. Whoa, wait, hold on. Did I see Brookfield as the largest shareholder? So BAM, ticker symbol BAM, Brookfield Asset Management is the largest shareholder. Oh, hold on. This is a Canadian company. So we've been looking at Canadian currency. So we'll convert that to USD. It's a utility company, wind, hydro, gas, coal, power plant company. Well, anyway, there you go. Yeah, UZG. Hope we don't fall on Monday. So Sui said TLRY. I feel bad if you own this one because the momentum's been pretty good the past couple months here, but this is the kind of stock that I sadly think is going to keep on going lower and lower, potentially bankrupt, sadly. Because if you look in the top right here, you're able to see the numbers for yourself, and then you can draw your own conclusion. Here's what sucks. The whole company is worth $1.9 billion. So the whole company is worth $1.9 billion. But check this out. Oh, actually, they just reported earnings literally like within the past couple days or on Thursday or Friday. But yeah, look at the quarter before today. They lost $1.2 billion in net income. And the quarter before, oh my, TikTok saying I'm AFK. I'm unable to verify. What? Okay, I messed up the CAPTCHA. Okay, sorry, TikTok just made me fill out a CAPTCHA. I'm back. But look, they lost $1.2 billion, $800 million. That was real net income losses. That money has to come from somewhere. That's why the assets on the balance sheet plummeted. So, and all that, for not too growthy of a business. Revenue's up 4, last quarter was 2. I would be so. I would not have meaningful amounts of money in that name, and yeah. I would have a plan to get out. I would swing trade that one. I wouldn't just buy and hold that for the long run just because of the industry. It's not an industry that I like. Meta using them for AI data center. Really see. That's why they went up 9% on Friday. That's really interesting. What's the best utility company in your opinion? Great question, Hoffman. Best utility company of all time. First off, my utility bill or our utility bill at our house is through Constellation Energy. But they have a gas network, one of the largest ones. But that's not why I like Constellation Energy. I like this as a utility play because this is the largest nuclear play by far. This company literally owns 30% of all the U.S. nuclear reactors. There's no close second. This is the purest nuclear play out there. They're about to acquire Calpine, which is instantly accretive, $2 a yearly EPS. They're the number one largest market share. They do dividends. They do share buybacks. They do synergistic M&A. This is the utility you want, in my opinion. And I also am totally biased because I own them, but I own them because they're the best. I've looked at all the other nuclear names. I've looked at Oklo, SMR, Vistra Energy, GE Veranova. I've looked at all of them. And none of them come even. Berkshire Hathaway Energy, they're even past them. Anyway, Largest clean energy company in the world by far. Literally, they have this one. They have a geothermal plant, which literally there's these geysers that release steam out of the ground. They collect this steam. It's in California because there's not many of these, but this one is called the geysers. It literally supplies 20% of all of California's clean energy. Okay, let's keep going here. They also have the largest nuclear fleet. They own like 22 nuclear reactors. There is no close second. 30% of all the US's. Vistra Energy, VST, owns 3 reactors. Anyway, I see ALAB. You know what? We'll do ALAB because they also reported earnings on Friday. If we go back to the Nvidia portfolio right here, thoughts on Disney? Yo, Isaiah, we'll look at Disney. Whoa, I didn't even see that. Isaiah with the Panther pause. No way. I didn't even see that, dude. Heck yeah, we got to look at Disney after this too before I get off. But yeah, check this out. If we go to the Nvidia portfolio right here, one of the stocks they own a bunch of CoreWeave, but their second largest holding is APLD. And this was really orchestrated by NVIDIA, but APLD just signed an $11 billion deal with CoreWeave. Again, NVIDIA owns APLD and CoreWeave. I'm sure they helped them out. But the reason, if you look on Friday, they were up 16%. On Friday, the market was really red. I'm sure y'all experienced that. The market was really red on Friday, but they were green on Friday solely because they reported earnings. And their earnings were very good. Check this out. If we go to the orange line here, that's what the analysts expect on their revenue. Oh yeah, hey, Louis Vuitton, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. By the way, this is a brokerage. It's where you get stocks on. It's a software. But anyway, the revenue was 45 mil, or the orange line is what the analysts expected, 45 mil. They reported 64 mil. Insane beat. It's your data center hosting place. So that explains why they gapped up so much. Pretty cool. Robert said, oh, wait, hold on. Wait. Disney long-term. Disney long-term isn't another one that I love as a long-term play. And I have them as a long-term play, though. So I don't expect Disney to outperform the market. Disney is lower than it was in 2014. You bought Disney in 2014. You're down on your money, sadly. I do own shares, though. I got 15 shares of Disney. We actually bought them during the little April dip down there. And, we sold 1 share, but we still have 15 shares left. Anyway, I bought Disney for their streaming service profitability. Disney used to lose a bunch of money on their streaming business. Now it makes them a couple $100 million a quarter. Disney just bought the remaining stake of Hulu from Comcast. So that's what's also cool. But yeah, they own ESPN, Hulu, Disney Plus. If we go to the free cash flow, which is that's what FCF stands for, or really want to look at the operating cash flow, the growth rates the past year specifically are insane. It's also, I remember it was basically at the very beginning of 2025, or wait. Yeah, at the very beginning of this year, they rose their prices on all their streaming services by a huge chunk, and it was all pure margin for them. So they rose prices. It was shortly after Netflix rose prices on all their stuff. Anyway, you get a 1.3% yield. I do like Disney. They also just acquired like a stake in what was it, U2s Disney's cool. Also, Disney, I heard, is sniffing out buying Build-A-Bear Workshop. I know some people don't want Disney just owning everything. But think about how synergistic that would be. Build-A-Bear Workshop, maybe you could get some Star Wars. Build-A-Bear. First off, Build-A-Bear Workshop has been one of the best performance, just in the past 5 years. If we zoom out on the monthly, not so much. But stock was 2019, $4. Now it's $59. But anyway, Build-A-Bear Workshop could be interesting. All right, does Constellation Energy have a good future, a lot of upside? I think so, Hoffman, but the risk to reward of buying Constellation Energy at this price isn't great. I'd want to see, because I'm up quite a bit. I'm up 78%. I'd like to see Constellation Energy much closer to probably 310. I think realistically it probably will go to 310, but not any lower. I was looking on the chart. It make the perfect higher low. Around 310, 320 is where I nibble on Constellation Energy. So I just put them, honestly, I'd put Constellation Energy on the watch list. I just love them as a great utility play. Also, all the nuclear stocks, I've just been on, Oklo, this is your nuclear startup that you never even want to touch. If you're going to buy Oklo at all-time highs, buying Constellation Energy at all-time highs is a million smarter times idea. What do you think? Daily said, what do you think of Palantir? Hey, what up, Trust Eye? How are you going? How's it going, man? So maybe we'll get, Axon's cool too. So ALB, is that Albemarle? We got to get to Albemarle. I keep forgetting to get to that one. My bad. So here's Palantir. This is a huge government play. Hey, Trust, thanks for all the gifts there for the ice cream cones. But here's one thing I don't love about Palantir is their valuation. They traded 125 times sales, 125 or 120 times revenue, not times profits, but times revenue is expensive. But here's what's cool about them. Literally 55% of all the revenue comes from the government. Check out how growthy it is. The government revenue is up 49%, after grew 23, after grew 15. Like the growth rate is growing. And not only on the government revenue, but also the commercial side. It's up 46 after 32, after 10. Also, that one's growing too. So we can also just see the orange line or the analyst expectations. They had their first ever $1 billion revenue quarter. They did 330 mil in net income, 33% net margin. That's easy math. They have a freaking fortress of a balance sheet. They literally have no debt at all. Debt-free company, $6 billion of cash up from $4 billion. Their cash is earning them interest every quarter. Like that's a huge safety net. Like takes a lot of risk off the table having no debt. So I can see why they're at all-time highs and I can see why the valuation is so high, but I sadly can't pay that valuation yet, but they're on my watch list. Are you day trading? What up, Luke? No, hey, market's closer now. And even so, I don't day trade. I mainly just buy and hold stocks for the long run. What are you using? Yo, what up, Easy? Hey, by the way, if you want to get this software I'm on, it's in the link tree in my bio, the first link there. It's where you buy stocks on. It's a brokerage, and it's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. A lot of people keep their idle cash. It's free too. If you look at the middle of my screen, I have $900 of cash, earns the daily interest. So, and you can see how like the super investors portfolio, like what Nancy Pelosi's doing. You can see their exact holdings and Nvidia. And also if you're looking for new stocks to buy, they have a bunch of cool watch lists down here. If you're looking for new stocks to buy, this is actually where I found a lot of stocks. Like I'm looking for certain industries, like drone concept stocks. I could look like AVAV, AeroVironment, Northrop Grumman. So there's a lot of cool different ETFs they have, or new ways to find stocks. But what I was trying to lead to is this down here. And the institutional tracker. You can see what Berkshire Hathaway's doing, ARK and Soros and all these cool institutions, but is the interest rate cut probability tracker. So if we look at October 29th, which is this month, there's literally a 98% chance of a 25 basis point cut. And then on December 10th, there's a 91% chance of a 50 basis point cut. We can see the Fed dot plot rate cut probabilities. We can see all these numbers down here. US CPI, CPI was crazy in 2022, but we've seen some normalization. Anywho, we can see like the jobs. I forgot all this data they have on here. Anyway, that's cool. Yeah, hey, by the way, I am. If you want to get this app I'm on, it's in the link tree in my bio. First link there again. It's where you buy stocks on. It's a software. It's a brokerage. And it's an affiliate link too, full disclosure. So if you go and deposit $100, I'll both get free stocks. But anyway, we'll look at one more stock here, then I'll run. I've been setting BB for the past hour. Can you look at it, please? I think, sorry, man. That's my bad. Hey, I try to get to all the stocks here. That is my bad. Are there fees? No, there's not. SoFlo. I love this one. Lowest fee brokerage. So here's BlackBerry stock, not one I love, not one I'd really recommend, except if you're trying to trade this, not something I trust to really outperform, the S&P. But this stock, this was huge early 2000s play, 2007, this was $200. Now it's a $4 stock. So, but they did just report earnings. I think, Yes, they did just report earnings and they gapped up on earnings. I remember the earnings were all right. Let me actually see. See, look at that. The orange lines of the analysts expect they did beat on revenue. They did beat on net income. They did beat on EBITDA, which is great news. But this just, the revenue's up 2.6. That doesn't really beat inflation. Revenue's up 2.6. The previous quarters, it was down. But the net income, is that real? They actually did make, they really only made like $5 million in net income, but they still did make net income this quarter, which is good. This is a momentum play. What apps do you use? Hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. Nokia stock, Did you mention DWA? Because there are two. I have not looked at DWA's. Food to a buy? Absolutely. By the way, so y'all remember this platform I'm on right now, this brokerage I'm on right now, Yeah, hey, if you want to get this brokerage I'm on right now, it's in the link tree in my bio, the first link there. But by the way, this brokerage I'm on is also publicly traded. So look, like this software I'm on, this literal app I'm on right now, this is their stock publicly traded. So it's cool to see that, hey, that this app that we're using, even if this company went bankrupt, you're still FDIC insured for 250K. But it's at least good to see that the brokerage you're trusting your stocks with is at least printing money. So this brokerage made 330 mil in net income this quarter. Brokerages have insane margins. They're just like Robinhood. I think this is a competitor to Robinhood stock, but the sales are up 69, but the net income is up 111. That's insane. They have a legit 48% net margin. Here, let's see. Here's the number of users on this app, 27 million users. Their funded accounts are from 2 million to 2.88 million. Yeah, these brokerages make a lot of money from interest income. So especially in this environment, look at their interest income growth. It's up 42% year over year. What is this money? Well, basically, again, I'm on their brokerage right now. If you look in the middle of my screen, I have $975 of cash, and they give you for free 3.85% APY. They also earn a little bit of APY on top of that. So they're basically for free getting 0.15% of this money just for custodying it, and you get the main 3.85, but that's how they make a lot of money, which is cool. Oh, they also just got into crypto. On this brokerage, you can buy crypto now, and if we go to their other income, which now includes their crypto, it's super growthy. This is just a pure growth stock with insane margins, making insane net income, and they do a yearly special dividend. So you don't get a consistent dividend, but a yearly special dividend was $2. With Robinhood stock, you don't get a special dividend. So anyway, that's this brokerage I'm on right now, publicly traded. So anyway, if you want to get this app I'm on, it's in the link tree in my bio, first link there. Oh, what's the ticker symbol? Yeah, this app I'm on right now, their ticker symbol is FUTU stock. If you that's them publicly traded. So yeah, there's their stock. Pretty cool. They make good money. So anyway, I'm going to go. I hope you guys have a great rest of your Saturday. So I'm going to go. But by the way, if you want to hit the follow button, we stream every single day. We just look at stocks and stuff. I sell nothing. And by the way, are you invested in Moomoo? I do, Johnny. I do have shares of Futu. Actually, let me show you that real quick. I was about to get to the stock portfolio update. Here, I'll just go and show you that right here. Futu stock. They've actually been a really good performer. So we are up. We have 8 shares of Futu. Full disclosure, we also own 8 shares of Futu. We also own Robinhood stock. Here's this brokerage right here. Robinhood is also a publicly traded stock, and they've been actually my best performing stock of all time. I regret every share I've ever sold to them, but we're up 10x on them on Robinhood, AMD, SoFi. We own a lot of popular names in here. Reddit. We do have some losers as well. But anyway, let's actually, I'm going to end this with a quick portfolio update. Then I'm going to run. By the way, as soon as this stream ends, the second the stream ends, best way to support me, by the way, I'm going to upload a YouTube video on my full analysis on Ferrari and MUSA. I just bought both of these on the dip for the first time ever on Friday. I bought Ferrari and I bought MUSA. So the style of the video is just like how I do it on this YouTube stream. It's just on my phone like this, and we just look at stocks. So yeah, watch out as soon as the stream ends. But by the way, my YouTube channel is called Nathan Roberts, also in the link tree in my bio. And you can replay the stream as well. If you miss anything, you replay the stream. But I'll see you guys later. Hey, see you later, Richard. UiPath is going crazy. Yeah, UiPath is. So here's the quick portfolio update. This is our buy and never sell account, where once I buy a stock in here, I try not to ever sell it. We're up 10K all time in here, which is pretty good. And those are our 2 new stocks, Ferrari and Murphy USA. I actually sold out of this stock. I actually sold out of DocuSign. You'll learn about why in the video. They have no moat. OpenAI just created DocuGPT. Stock fell 15% after they fell 15%. The CEO, CFO, and COO all sold millions of shares. Terrible look. So I just I'm out of DocuSign, whatever. And then right here, we have our risk on account where here's I love being fully transparent. Here's our full lifetime return. We're up 17% all time. Definitely haven't outperformed. But yeah, we got a lot of popular names. AMD, SoFi, Robinhood, Dave, Reddit, Disney, Supermicro, Axon, Progressive Corp. These are stocks also at good valuations. Progressive, Sprouts Farmers Market, I think is good. And yeah, UiPath, someone said, is this live stream pre-recorded? It is, Frank. This is pre-recorded. No, but and then finally we have our Robinhood portfolio. Yeah, you can see the time in the top left, but Uh, yeah, here's our dividend only portfolio. Year to date, we're still up 13%. This isn't even the real tariff dip. In April was the crazy tariff dip. We were down 13%. Now we're up 13%. All you had to do was not sell and you're doing great. Even if you didn't buy the dip, if you just didn't sell, you're doing great. And here's our total percent change in every stock in here. Luckily, we are green on every stock except for CSL Carlisle. That's that roofing company. But yeah, every stock in here does pay a dividend. And all these, as you see, are dividend growth companies like Meta, Google, United Rentals, all have like way less, the Constellation Energy, Carlisle, all have less than 1% dividend yields, but they all still pay dividends and they're like dividend growth companies. And then we have a Roth IRA. How's that done? Yeah, we just started this almost exactly a year ago. We tanked on Friday. So anyway, when are you streaming tomorrow? We're going to be doing 2 streams tomorrow. Yeah, if you want to hit the follow button, we stream every single day, sometimes twice a day. Tomorrow, we're going to be doing 2 nearly 3-hour live streams. So tomorrow, we're going to be doing 2 3-hour streams tomorrow. So yeah, see you Only Pack, see you Brian, see you Wealth, see you Johnny, that man, Mohammed. Hope you guys have a great rest of your day. Love tacos. What's up, man? Check out SGov for your Roth. Hey, that isn't SGov a bond play? I forget. So anyway, see you guys later. Oh, wait, hey, go to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Literally right now, in less than 5 minutes, I'm going to be uploading my video on why I bought Ferrari. Check that out. Hey, see you guys later. See you, Lucas. See you, Prime. Thank you to everyone on the YouTube stream. As I know, I'm trying to build up my YouTube channel. Appreciate everyone out here because I get way more viewers on TikTok, but I'm trying to convert them onto YouTube.